All right. Welcome. Got the stream on. So it looks like we've just broken the trend and done a retest. The open was pretty uneventful so far, but that's okay. Retest just completed and tested the POC. It's kind of like a right shoulder retest there a little bit. Basically, the right shoulders come down to test the line and give us a little bit of nothing too crazy, of course. When we take a look at yesterday's movement real quick, it was kind of an interesting situation where we had many symmetrical triangles developing into, you know, this converged area where it faked out going to the upside, but then there was this like liquidity grab at the end of the day, and that's what we were looking at, what we grabbed on the break of that trend line to get through the gray line. And it's interesting too because the the move that we saw there was very, very, very institutionalized. And if I make a video on yesterday, um, this low one that I said to keep, even through this entire pullback. So you didn't actually have to catch that one, even though we caught it anyways. But okay. Been a little bit slower towards the open lately. I'd like to see it pick up soon, but typically we start this slow down around like 11 o'clock, and the ATR starts to have a little bit of a dive. But it looks like the ATR's, hanging in at 11. It was higher yesterday at the open. But remember, the long-term VWAPs are up top, and we did respond to them overnight. And I'd like to see us get up to this red zone, the red zone up here. We've been putting a lot of work in to try and smash this range. Ultimately, them making it difficult to get exposure to that is not uncommon. Okay, question where the 61 is on this right here, close by. Notice that like trading back up to that 61 has been very common lately. Likes to where it does that. Nice to see that it's getting some sort of acknowledgement. Looking at the high of the node there too. Get knock on the door of that extreme there. Back under that 61. Test it from the underside again. Likely. Remember, there is a red zone and green that we haven't really used. Testing the 61 from the underside there. The green zone where a new trend has been formed.
Hey John,
Yo,
the reports at 10, how big of an impact do they have? I don't remember any of those.
Take a look here. Sorry. Um, the impacts at 10 o'clock. There's none today at 10. Are you seeing reports today at 10? There are more.
Yeah, sorry.
You did
Post you
see.
a picture. Post you a picture.
Where's that? Oh, you posted already.
Sorry, I'm kind of slow today.
No worries, man.
Some like Atos exclusive.
And that's supposed to be for today, eh?
That's what I show. That's what it shows.
Hmm. Yeah, those are typically like not incredibly impactful reports. Like the new home sales, the consumer confidence. They can move the market. They have in the past, but they're uh, they're nothing like the interest rates.
Good morning, John. How are you doing?
Hey,
How
morning.
are you doing?
Good, good.
So it looks like we got a target above. So
We do have a B point that has just been formed at the 161. The 188-200 in the red zone below. High to another range there. Slow movement this morning, that's for sure. I'm under the impression that it might not want to get fully developed before returning back to the B point.
What do you mean by fully developed?
Like down into the 188-200 or the 261 levels. Because playing out from here considered early.
Yeah, I think it's just kind of wasted some time before it drops some more. Personally, just kind of consolidation.
Yeah. Just grazing the 188 right now on top of that red zone. ATR is still relatively low. I can test to the 188. You know, I'm like, I switch back over, right? And then I take some off the the MNQ, and it does one of these guys. Um, like, am I paying twice for that? You know? I mean, it sells the contract and everything, but does it run me for commissions twice? Because that's like, of course they would make it do that. It's
It's weird.
yeah, cause you know when it's like, right, I've got a position on NQ and then I close it and then I go over back to an MNQ position that I've got a bunch of, and then I go to close some of it when there's already a strategy on that, uh, and it does this weird sell, but on both sides. I'm like, what is it doing? Buying and selling. I mean, it doesn't sell too. It's like shorting and selling at the same time. I'm like, I don't understand how it's gives me two sell orders. One of them's a cover and one of them's a short. I'm like at the same time. I'm like, that's weird. I think it's a program thing though. I hope it's not charging me twice for each one of those freaking arrows though. That'd suck. Not that it's Very expensive, but adds up. Not that it happens very often either, but on the topic of ATM strategy. Consolidation gave me like some fourth wave vibes. Fourth wave vibes. Sorry.
Starting from the top of the trend line for the fourth wave.
Well, the fourth wave would be this consolidation. The reason why I say it's the fourth wave is because this node right here, this area that we've been spending time in, very like counter trend move like, and I find that that node, it's very similar to what we did up here. And I know it poked above and below a particular amount, and I'm like, well, what if it wants to do that on this one as well? Like just like how it did here, because kind of like that node fits in the middle of these two spikes basically. And I'm like, well, if it is 1, 2, 3, 4, 5, it would make sense to have like a little bit of a fifth, because it's like 1, 2, 3, 4, and 5. And lately we've been seeing a lot of this 1, 2, 3, and then the fifth wave would be like that. And I mean, like, is it trying to do that? Because it's very similar, in a lot of ways. And I'm like, it is the time of day where the most of the people are going to be hovering around the market's break, and a lot of people can only go long. Some people don't even know what shorting is, and they only think that you can make money when you buy low and you sell high. So it's like once all those people are out of the way, then we see a lot more free movement, a lot more really clear movement. But it's like I'm starting to think that when you go and buy a mutual fund and or like stocks from a traditional broker, I think that they fill you at like 11 o'clock the next day. Because when I bought my first shares ever, like I wrote a check and I was like, oh, here you go, handed it to the person live and didn't even look at a chart at all. And I was like, well, I want this much of this bank and whatnot. And I was buying TD Bank, and and they were like, yeah, we'll have you filled tomorrow. I was like, okay, I didn't think anything of it. And now I'm like, tomorrow? Well, it's like it gives them so much leeway. It's like they could say they filled you tomorrow, and you've given them your money today. They could trade today with it technically. And I'm like, I don't know what the hell they're doing with it. I don't know what average price they've gotten, what average price they gave me. It's like imagine they've got 10 clients and they all want the same stock. And then everybody's like, okay, we're buying this stock and we've collected a bunch, throughout the day at the best prices that we can. Let's sell all the worst prices to our freaking clients and keep the best prices for ourselves. I'm like, well, who's to say they're not doing that? Because it sounds like a very human thing to do. An evil thing, but it's finance and people do shit like that. It's very it's not uncommon, that's for sure. I don't agree with it, but it is I definitely look for it, stuff like that. You gotta watch out for shit. It's brutal world out there. But at the end of the day, tomorrow is a little bit much to get filled. It means like they can pretty much decide what average price you get. They can tell you, they could be like, you know what, let's fill them at the worst price of the day when we've got the best price of the day and keep the middle bit. You know, it's like, has a broker ever done that before? Should it be illegal? Oh yeah, it should be. I don't know if it is though, but it should be illegal. I don't care if anybody's even done it before. You know, it's like somebody's got to be making those rules. It's like, why does somebody have to like actually make money off of it for us to make it illegal? It should be illegal from the get-go. But regardless, at the end of the day, we're sitting here grinding at that 188 again. The 261 is close to the green zone down below. I'm looking at the size of the wicks and spikes out of the top of the first range and definitely thinking about that here. It is the third low, but not lower low yet. So when we make that third lower low, coming back to the first of the three lows, something of an interest to me. We've pretty much made that low. Now make it a blue one because it's already technically been hit, but Coming back to the 261 from the underside is pretty normal. We can see that broken beneath it. Mark it with a dash line. Same distance that we had at the top of the channel is almost seen out of the bottom of the entire channel. The fifth wave, almost the same size as the first wave. First wave could be truncated, but it's very similar. That's coming back to the 261 from the underside. In this case, the B point is just a pause point. Likely to actually go through it. Anybody that captured a move back to test the 261 from the underside, should keep the stops at the extremes. We might get a test from the overside. I'll be right back. Exactly, keeping the stop at the extreme, and we're good to go. The exposure obtained at the 261 should be profitable, and some contracts can be taken off to secure the trade. The blue dash line is hit. Gotta watch for the breaks of the yellow downtrend. You can see just like this. This is basically, and this is a green zone to that channel just beneath the 261, the first of the 3 lows on the red zone. I've marked with a blue dash line. All original trends maintained without readjustment. In this case, the B point is just a pause point. Very likely to get through it when we get there, the green dash line. I don't know how more specific I can be. And then you took the return to the 261. Notice the blue dash line was hit. Burst out of that. That's
So when we have a downtrend and a sideways move, then the count trend's 3, correct? Normally, typically.
hmm? Yep.
Are we still in the first wave, or are we in the third here?
Well, we're in the second now, I'd say.
So the second's on the way down, and then the third will be back up again.
That's right. In inverse head and shoulders that ended with a 5-wave move, typically it's just part of a 3-wave move that comes after. But it's not obviously going to work like that every single time. But those that caught exposure from the low have exposure to this playing out. Like, I'm not an advocate of buying second wave though for the third to play out, because the third, this second wave could fail, but guess what? It's still profitable for the took the 261. They don't have to take a risk here though. Like, I wouldn't take a risk here. That's the difference. Just because I know it's going to play out, or it's supposed to play out, it's too risky because it's not the best price. And when we do pull back, do we pull back past the point from here? Like, we've been doing 95% pullbacks. The only way to be safe from those is to be able to have a stop at the extreme. And if you can get a position here where you can take off enough contracts to keep your stop at the extreme, then it might be worth doing it. But it's tough. I would consider it chasing by this point. And it's like there will always be a time where it is reaching the 261, where it does offer a short-term trade back up to underneath it, and like those are check marks that this doesn't have at all. There's no short-term trade that you can take off enough profit to keep some running. It's not like you can trade back up to the 261 and take off a couple contracts and let the rest run through all of the levels. But in this case, there was definitely a solid 8.5 points um, back up to that 61, and you don't even have to take all of it in order to make it safe to keep a stop at the extreme. The risk is a lot less, and also having a green zone to a red zone, a first drive to a 3, so like you knew that it wasn't just the 261 that you were getting to, it was the 3 drives and also the return back to the 188 200 from the 261. Like, there's a lot going on in the underside of that 261, and all of the things I just mentioned are not happening in here. I'm like, if it wants to come down and test the people of this blast and do something like that, that would be really bad for anybody that traded in here. But it would still be fine for everybody that caught this position. And it would also mean that, um, yeah, we could have like an angle to the inverse head and shoulders still, but it depends on how many people are in the way. Like, I know that if they are in the way, this is a move that can definitely happen. But if they're not, then it can move freely. And like, this is a time of day where people are typically in the way, and consolidation is most likely. So that's why my skepticism comes with it. Area. It's dawning on everyone now that it really looks like an inverse head and shoulders now, and that's the second wave really starting to show itself. And it's interesting because it has a downtrend. Almost made that downtrend apparent here. Could see this out of the high after it's finished. It's like, the people of this this right shoulder, let's say it plays out and continues to hit everything, right? This down here, it's a level that's very small, but it is a B point nonetheless. So it's like, let's say for instance, if it rallies up and then decides to come back and get this B point and then rally, these people are still safe. And like yesterday, I would expect them to continue holding with a stop at the extreme, even like it's going to come back after most of the day and come back to this point when you've literally got this point. But guess what? Taking that trade, you know how many risks you may have to take in order to get it, to know that it's going to reverse there, and for the people that have this low, it's unnecessary to get in there. And we may see something similar today. But anybody that buys on the first flag up, you know, they don't get the same treatment. Everybody got wiped out. And the only thing that I can say is that they were late, though. So,
Where would you prefer to put your fib extensions on this move up?
on the move up, um, so I don't have any on there because it doesn't finish yet. Like I guess we could put it on here, but the only levels that we'll get with that are levels that project higher. They're obstructions to our ability to get to the B point all the way. Like the 188-200 is very close by to that level. And the question becomes, are we interested in grinding the green zone?
You know, I was trying to figure something else out. Hopefully, like how a fib that lines up that B point.
Yeah.
Anything.
No, yeah, there's the 261 up here, and then the 188-200 here that could be. But one level that could line up with this one is actually a 61. It might be a little bit. It might be a little bit higher. Yeah, bad. Like making a 61% retracement of this entire move would get us to that B point pretty much.
That makes sense. Yeah.
This is a this is what I noticed this the other day actually. The 61, the 261 lined up the B point. Beautiful movement, absolutely beautiful. So we're testing the gap now. I think we're going to want to get on top of that 61 and test it from the upper side. Well, remember what I said about the green dash line too? It's just a pause point. And it's an appropriate one too because it's a gap. So running through the gap to pause bottom, or sorry, on the downwards move, on the upwards move as well. And what that would do is 5 waves down into 5 waves up means it's a spike. It's used the same velocity and speed and time and such to go down that it did to go up.
On a higher time frame, like a 15 or a 30-minute chart.
What on that? Oh, just on this chart.
Oh, I was thinking a spike. You know, like if you looked at a like
Oh yeah. Like the spike would be visible, like on like yeah the 30 minute. Yeah,
30 minutes or something.
sure. Yeah. Like this would be like the zoomed in version of the spike essentially. This is the B point here.
Bam.
This chop is normal as well. It's trying to get people to get out of their entire position. By the time it gets back up to the second test of the 61, people look at their profit and loss again at that point and they're out, which is fine because the green zone typically gets a crazy chop.
You don't have a trend line on this move up for some silly reason.
Yep,
Oh,
it's in it's in uh in play for sure.
I know you're the type of trader who doesn't need trend lines.
No, I definitely need trend lines. That's like telling the mechanic he doesn't need a wrench anymore. He can just use his fingers.
Right.
Or the doctor doesn't need the
That's so
scalpel
true.
anymore. You know, just wing it. Use your teeth.
And your nails.
Yeah, right. But yeah, no, it's interesting. Like I think like the more like it's funny. It's like I take off a lot of trend lines now because of people like a lot of people would think that it's like a basic thing to have them, but I actually have like more trend lines than the novice traders do, ironically, which is very strange. You wouldn't think it. You would think that the clear chart with nothing on it and just one line or couple indicators, basically it unchained. It's expected that you look at the market the same way all the time when you look at those charts. That's what I get out of them. When I can see that everything is a one size fits all setup on the chart, it's like every environment fits in these indicators. I'm only looking for one thing. I'm like, not me though. I like to have an understanding of the entire environment, and and it constantly changes. Like not a single day goes by where I draw the trend lines the same way. That's why I have different color codes for them and such, because I think that you know I think that it's the visual aid is impeccable. Like if I just had everything as one color, it would be hard. But and it's once you understand the colors, it's very simple. It's like there is less to understanding this than there is into understanding how to play chess. Like there's less variables. Each trend line, as I say, I think I could explain trend lines less than I could explain, how in the less time that it takes to explain how any piece on a chessboard moves, and it's like, yeah.
Morning, folks. What's going on? Morning, Art.
Hey, morning. Really clear movement this morning from the 261 up to the B point. And it's interesting too because you can see that it's coming back for the people of that second wave already. And you know how we had a 61 up here? We could do a 61 down here, and that could be a wick and spike that takes us back into this point that we're at right now. Basically like a little bit of a reversal spike. Curious about that 61 myself, because it is sitting on the bottom of the node. And what's interesting about that inverse head and shoulders is that it's set up to potentially be a head and shoulders in the event that we make that kind of movement. But inverse head and shoulders to head and shoulders is a common way to consolidate nowadays as well. And it's like the people that took the flag are now, basically put in a situation where they have to fight for exposure again, using the profit that they made on that first lunge back to the B point. And I had a feeling that would be the case. That's why I thought it was a little bit risky. But regardless, I think it'll get through that B point at that 61. We can see now we've essentially hit the 61 and come back up to test that node from the underside. Exactly what I was mentioning a minute ago. Just like a little reversal spike kind of thing. And that's basically all it wants to give right now. It wants to put people to the test again. So it's like if that move, when it hovers this long at a level like that, it should offer enough profit to just securely save yourself.
Did you type in that 261, the big bold one?
Yep. Just because when I leave them on, look like that. I was like, yeah, a little much. When I make them harmonic, I'm like, these levels really start to clash. It looks like there's a ton of levels on there. I just took it off.
Understood.
And the gold dash line is the 261 for real. Like that's what I've overlapped it with. But there that was. It was pretty much only the move that they wanted to give right there. Put everyone to the test again. So it's kind of formulated that head and shoulders to, or sorry, inverse to head and shoulders, where basically all of the shoulder levels are pretty much at the same level. And we saw something similar to this yesterday. Side of this area here. Basically, around this node, it offers very minimal movement, and the odds that it makes a move is unfavorable is a lot higher because the positioning for any trade from that middle area, regardless of it's long or short, it has statistically offered smaller moves than the ones that trade back to that area. Now, anything that's pro getting back to that area are better than anything away from it. The people of the head and shoulders have been put to the test, that's for sure, because anybody that pretty much traded the right shoulder in a downwards motion or downwards direction, it's being put to the test heavily. Anybody that's keeping their position for the low, for the stop at the extreme is still fine for now. If you're taking off profit at the B point, more than enough payment should suffice to continue holding what you have left from the 261 for a continuation beyond the target and beyond the high day. This is typical the ATR to kind of come off a little bit at this point of the day. I think that we're close to the end of this consolidation than the beginning of it. You can see some sort of triangulating happening here. If you hit the refresh button on the stream, you should be able to see the thing from yesterday really protruding into today's range as well. These ranges that we can see here are from a while back. They're not quite a year. They're not from any ranges. Yeah, won't traded in here before. The green zone and red zone suggestive of a move that happened inside of that area, and so is this. And where we're spending most of our consolidation right now just so happens to be in between those two levels. And that's fine. Distribution of the volume. Like I said, it's going really slow right now. It's kind of like the calm before the storm because the volatility is suggestive that we're getting, we're contracting into this very, very tight like, range, and essentially getting ready to bit on an increase of volatility. Will provide data. And with all the time that we spent at this level, the volume profile has grown substantially, and the other node of interest is the one that's above at the original consolidation of the open. It may take some time to get to, of course, and some fake outs back towards the initial entry, but I'm watching for wicks and spikes to kind of shake out the last few before we try to fully break the trend, because the trend from the high, the yellow one, essentially hasn't broken properly. It's broken twice already, but debatably 3 times. This is like the 3rd time that it is attempting its break, and wicks and spikes have managed to doesn't only mean the B point, but actually getting through it the next time. That's why it's proving difficult for anybody that's either late or trying to gain exposure to the movement. And it's very normal. Yesterday, it played out nearly a 95% retracement before any continuation. I'm curious to see if we manage any wicks and spikes into this range that rival that position and also ultimately end up getting back to these levels right here. Pretty spiky. Again, why so particular? Coincidence again? That's likely. Also, this peak point down here that originally I was mentioning was unsafe for people, that were trying to buy here because the inverse head and shoulders. It was unsafe to buy that continuation because of the fact that it was buying on top of a peak point. Ironically, this move, the spike that it made, grabbed all of the B points that are untested down below before coming back to the first target and leaving the second one. Now, ironically, the second target, it has to break through the yellow line in order to get there. Multiple wicks and spikes can be seen before trying, but ultimately those that kept their stops at the extreme originally still don't have to take any risks with this one. Not that it's incredibly risky, but Yeah, it is. Very likely that we end up gravitating towards the large node. And when it changes direction, it can also change its speed. We may see some of that because as it's left this consolidation area now, it's done it in a slower way than it's ever done before. And I find this place intriguing because you can see beneath on the volume profile inside of that green zone that it has very minimal volume. It's like it started to cascade as it goes to 361 is the green, basically, the far side of it. Not as close as we got yesterday, though. trying to make it really deterring to remain exposed to get to the red zone, but I don't think a lot of people have these ranges, and it hasn't really been used well yet. But I think we're gonna get a red zone, or sorry, green zone to red zone soon. Yeah, just a small one because it's got that giant node right there too, right? So busting through that node could be a little difficult initially. Just chopping at it and then getting through it be acceptable. But if we ran through that node, testing it from the upper side would be really normal. That's an option too. They could force it right through the top of the red zone and then have to come back to test it from the other side. But it hasn't really made any kind of spike yet, which leads me to believe that they're just allowing people to accumulate in this low, and when they make a little bit of a spike, they can grab everyone's position at once and then get it to the red zone.
I didn't know this, but Manchester United is public.
Yeah. Terrible. A long time. A lot of teams used to be public. You used to be able to trade Newcastle and stuff if you wanted to. That's all private though. Here's that stuff. Just basically everyone can accumulate it into one position now. Basically, you can see that entire node that was created at that level. This is a spike just to accumulate all of that volume. And you can tell the next node that we make, it'll probably be about half that size, because the people will be eliminated. And then they can use the same size order they were using inside the node originally, and it'll move the market. And they're not going to get in any trouble for market manipulation because the order size that they're using is exactly the same as what they were using in the morning. Just to say that they knew it was going to have any other impact. But the slowness, sometimes I wonder if they even get the AI to trade against the short-term ranges. So when it pops up, they sell it back into the range. When it pops down, they buy it back up into the range and just keep it as flat as possible to deter as many people as possible, and to get as many people that are just like, basically mindlessly buying and selling inside of a consolidation. They come down and grab most of their stops because they can see them all clumping together at the low there. And it's still not as low as the 261, but guess what they're doing? By stopping people out at the 261 here, they're getting volume at that 261. They're developing position at the 261. Yet they're doing it off of the backs of the people on that node. And so long as they're hovering around in the faces of the institutions here, they will accumulate until they're gone. And then we'll see the red zone. But it's not a matter of, just click and go. It's a matter of, are they still there? If to test, are they willing to trade? And the move from the green zone to red zone will let us know how much they're willing to chase. If they chase hard, it might fire through the top of the red zone, only for it to come back and test. Because the more that they chase, the more likelihood that we get a pretty fat reversal. Because that means that whoever chased can be accumulated, and they're looking to see if the people are interested in trading in the crappy little sideways ranges, and how much they can get out of that, and then how much they can get out of the people that try and chase it. Ultimately, the people that try and chase it, they're pretty much going to be adding volume to that first smaller node as they try and accumulate it as it's going up, and it'll be relatively easy to get them out. As soon as a big chunk has accumulated on the way up, it'll stop moving almost certainly. And the quicker that it moves, the less likely people have managed to chase it. But if we can see that it's slow in its breakout and it doesn't jolt with one move, definitely gonna collapse them in this case because it looks like the people are the problem. I can see so far. And the irony is, I don't think it's the people that are getting ready to move the market, but the institutions. I think that the people, as we go on right now in the smaller, tighter range, are getting, less and less, and the amount of market participants is thinning out. And I think that that's the game plan for the institutions. They want that right now. So the positions that they've accumulated off of people in the morning, um, essentially, have a better chance at being able to run. Because we can see it's like a slow bleed, and it's for the people that essentially didn't value the 261 originally, and it's managed to come almost all the way back, raising the 261 now. Just a little bit more would actually get to it. But a secondary test of the 261, essentially, starting to look a lot more like yesterday. And now it becomes a very similar situation to before, testing the 261 from the underside again. That yellow dash level can offer great scalps, right back to the line just like that, right back to the yellow dash line. So the market's basically testing people. So you must want that position. Now, I mean, if you've taken off contracts at the viewpoint above, you may have acquired more back to that level because it is also obvious that it is going to return back to that level, and it offers like a nice solid 8 points or more in this case. And it held down there relatively well for a relatively long period of time, so we may get a couple of those returns even, and you not be surprised. A couple returns back to the other side of that 261. The irony is the next time we get back to the viewpoint of that 261, we're likely to make it through it. And it is going to be on a D leg to a W. So that means that the move that we made back to the 261 is subject to being doubled the upside. Not only just getting through it, but actually doubling it. Because doubling the move back to the D point essentially gives us a 188 200. Well, it give us 200. Curious about the further returns back to the yellow 261. I'm testing it from the upper side as well. So like a jolt through it to the upside could offer a need to test it from other side. There it is from the underside again. Any positions captured from the test of the underside of that 261 yet again have the same position essentially as those that caught it in the morning. Now, it did not officially make a new low, so any stops kept at the extreme are still safe. And of course, any scalps taken for the test of, remember way. Whatever position that you have left, depending on if you got more, like I said, back to the 261, you could have more for the entire trade again with the profit already being taken at the B point above. It's a lot less risky than the initial trade. Having a cushion to back up the new position. I can't help but notice that the last time that we left the red zone was roughly for the same amount of movement that we did a moment ago. The yellow line actually getting its retest from the upper side now in a way that it hasn't before. Curious to see if it's interested in moving through the node to the red zone, or through the gap to the red zone. And essentially, like I mentioned, the people of this secondary low have a chance at being part of a trade twice the size as the previous one. Basically, this is that. Basically how I've mentioned it as we go on. Another trend break of the yellow inbound. Watch out for a quick spike beforehand. A secondary low, slightly higher than the first. Any positions captured have a potential to be worth twice the value of the last trade or more. From the point that I mentioned a spike, everything has been bought back up quicker than it was sold off, without making a new low. Keeping the stop at the extreme is safe. What the market's telling me right now is pretty much it only really offers the people the best positions right now that are trading back towards the green zone, back towards the 261, and not trying to actually get the 261 itself, but actually making it safe to get back to it. And it's so particular in this environment. And brink of changing that. I don't think it's going to be the same. So making it part of a strategy is not a good idea because it's literally going to change very shortly. We're seeing it a lot, and I think it's subject to changing. So, tomorrow come around, we might be in a completely different environment, and it may not respect that at all. The green zone did lead to the red zone, and it was off of a spike. It blew through this baseline to get to the red zone. Now, of course, it's baseline originally. It's here, and it can be tested as we go on. But it's not something that you really want to trade back towards. Just don't be dragging your stop above it, kind of thing. So I'll turn it down a little bit. So this is off of it a little bit. Because it's not essentially a large move that's required to really get that as well. The risk in fighting against the trend from the beginning is relatively high. For what it's worth, just let it hit, and that's finished. If you scalp towards it, make sure that you're profitable by the time that it hits that level, like right now. Because if it can snap back on you, and it's very risky to keep holding without a stop in profit or having taken some profit. You were kind of stepping on top of the node there too. The volume profile node, standing on that right there. Nice stepping on top of the node, beautiful. You could attack it again too, but that's nothing. Sooner or later, the node above should get attacked, and having the step on top of that too. But the one on the top's not likely to just have one test, you know, it could have many. As the one on the bottom could too, but I mean, it doesn't really matter if it wants to have 3 or 4 tests, that's fine. It's a matter of it continuing beyond it ultimately. You can see the other target's been hit here. here. Small levels like this one can get hit right after too. Be aware of that. And I wouldn't drag your stops in its path of being able to hit that. Of course, there is a trend very similar to the last one that we had there in a lot of ways, almost identical. You know, what I find intriguing about that is that even the points seem to be maybe there will be more similarities. This trend, the last one was a 5-wave move very clearly, but the 5th wave is longer than any other move. Maybe the 3rd. So it's going down to hit this high. Kind of not that important, right? But you know, if you didn't know what's going to happen, you might have tried your stop above it and gotten smoked out. So if you did take a hedge on it, make sure that you take enough profit now to ensure your safety on continuing to hold that trade too. Just to be clear, not that I suggested taking it, but it did play out. There's another tap of that node. Getting old and difficult to return to, for that matter. Another step on the green zone there. Pretty heavy volume. And a lot of the times that volume, that's the test of the waters. They're trying to see if people are going to flood in on the first sign of a green candle. And I think they are. Or chop. Deal with. They don't want them in because they're going to get out so quickly. It's going to become an obstruction at the next barrier. The next barrier might get additional sellers and threaten the accumulation on the. So they have to be very careful. But with a little bit of patience and a little bit of grind, the will are deterred. More and more eager as ever goes on to break the trend. It's inbound. It's just a good job for maybe 50 minutes at the POC in order to fill the line. As far as our average consolidation goes, it would seem like this one is coming to an end. In terms of the time that it took to make our average consolidation there. So curious to see if this can cause any impact. It has enough room to fit an entirely secondary one in there as well. So that's why. Because in order to actually buy more time with that trend line, it has to leave the range. It has to leave the green zone to the downside. There's only so much more green zone that it can trade in without having bought more time with that yellow. It becomes an ultimatum. Pretty heavy test of integrity on the green zone there. But after all, this green zone and red zone is doing what it does best, and that is as a confined area where basically consolidate. We can do that again up top as well. Did you know that those two ranges were related? And there's a very good chance that the one that we're in right now is related to the one above. And the consolidation that we have down here, we could see up there. Volume basically gets pieced out up there after this. 261 again. We got 78% retracement, 88% retracement.
Do you have a chance of holding this low?
The chances, no, they're not extreme. Like I got like a percentage chance. I'm not 100% sure, but basically keep making sure that you've taken off enough to withstand the pullback at the extreme is key. You get into the red zone there. Like if it makes us fight for another entry past the low that it made originally, then we'll look at that as a completely different trade. But right now I can see it's still coming back up to the 261. I think everything is going to be bought back up to the 261. And basically any positions that were pieced off in the red zone can be accumulated again in aspirations of getting through the 261 again. Like the test of the underside of this smaller node is something that we could see. The 61, the underside, this right here. It's a nice short-term node as well. Short-term target level. Easy, quick scalp profit. Like that. Good enough for me. And now trying to rival it to get to the bigger one would be ideal. So we're rivaling the node right now, trying to get on top of it so we can test the bigger one. All very particular. And it's meant to be very difficult for a lot of the people that just look at it like this. They just see it as going sideways. They don't know that people are trying to accumulate using them. They don't know that somebody's thinking about them and how they're trading and their pool of knowledge and such, and exactly what their next move is going to be, because it's very likely that you can figure out the average person's move just by opening Google and looking at it for under a week. So it's very, very, very common for everybody to be clumped together in the same spot. We can see it on the volume profile that they all like to trade at similar areas, and the market doesn't respect those areas very well at all. Because it overlaps them, it makes the people of the node into losers in both directions of equal distance. You know that POC right there, it's had a move on the top of it, the same size as what we've had below it twice now. Did you know that that's exactly the same move that we did before as well? So we did this. We came into a movement which was sideways, down, and then up and into the middle, sideways, right? So sideways, down, up, middle, sideways, this movement right here, exactly the same as what we have here. You can see we just broke up, we got to get to the bigger node. Absolute precision. Stop still safe at the extreme as of now. You want to know what the irony of this move is, right? Did you know that this one and this one, they do have a difference? One difference. This movement right here wasn't equal low. It's higher. So what that means is we have an uptrend as small as it is. After testing the POC for the other side, we're interested in trying to break it now. Ironically, it could take another small consolidation to get through it. Appropriately, it would seem like we have enough space for the one in the middle. But it's like, well, do we use this every day? No. But it's very similar to a move that we have here. We have a spike on the bottom and then a spike on the top of a consolidation. We kind of have that in this environment. And of course, it's an S wave, but it's a way of doing an S wave. And it has this added flair to it where essentially we managed to make this move. And then on this one, we managed to do this move. Roughly this move right here. It's like this move to the bigger picture one. This larger spike that gets back to the middle area. This is a larger spike that gets back to the middle area, and when it was done getting back to the middle area, what did it do? It went down, and it went down here too. So it's following suit. What happened at the point that it got to this point? It made the entire pattern again, but smaller. And of course, we've got some triangulation there as well. Of course, there's another trend of interest. It's this one. Where it becomes a little relevant. And the return back to the triangle is another major consideration in this case, which also is going to be like another return back to the 261 again.
Consecutive drive.
It's what's interesting is the second low is not as low as the first. This is the first spike past the low, and it's just being added to the accumulation as well. From what I can see, the entire Everything's being accumulated, as I said, back into the triangle, and basically that's 61. That has been hit before. It's not as strong as what it was. I can see that the move that we made from the red zone is also a 5-wave move down into this point here. So we could make like a 3-wave move to the upside, like we saw before. But by the end of this, I think that it's very likely that you can see that it's like a variant of an accumulation range. Basically, it's not a Wyckoff, but I think that it's being used as a accumulation range to get us to that other range slightly higher. Green zone on the very top, basically. Basically, anybody that gets stopped out in this range is being put towards an institutional position that's being accumulated for the upward swing towards the end of the day. And it could be a multi-day move, so keep that in mind. So now we're in the red zone again. I just had to in the washroom. So it looks like we are moving quite well. All of it was accumulated by our friends on Wall Street. You can tell they moved it like that. That wasn't unanimous public movement because it's been, they've all decided to band together as it's gotten more difficult for them to be a part of this very trend break. Because it was difficult only for the people that wanted to be exposed to the trend break. And you gotta know you want it. You can't just be lucky because they've wiped everyone out and then ran away from it. And not too many chasers this time. So we can deal with them lightly. There won't be much obstruction from what I can see. That pattern is the full version of what we saw down here. And it's like the public will not catch on to this they won't catch on to it right away. They're too busy forcing their own strategy over the environment, of course. This is something that we didn't see yesterday. We didn't see the day before. Well, we might have seen yesterday actually, in that kind of chop that we were doing. It wasn't as even with the shoulder levels, but perhaps in here. Like I can see this very clearly sideways, up and down into that same consolidation, and then it rallied like that, and then moved up hard. Aim from a spike out of the bottom first. Aim on.
Yeah, I'll be on for a little bit. Yeah, internet's just kind of spotty, but it still works.
Oh yeah, nice. Good that you surviving the storm.
Yeah, it's still a little bit left. It's gonna ease up, so that's kind of cool.
Yeah, it's been raining and stuff. Eh?
Yeah, raining a bit, 60, 70-kilometer winds. Keep people off power over here for a while.
Yeah.
Especially when you're sitting in an RV and the winds are going 60, 70 kilometers an hour.
Yeah.
But I'll be heading back there soon, anyways. Go to Vancouver there, probably Thursday, Friday, and then get back to Nasdaq to do the storehouse this time. So yeah, that's kind of low, but
Yeah. You'll probably be able to maybe get some traction by being there. You think? And be able to sell it easier, or no?
it's gonna probably take off the market waiting until spring now. That's what I'm doing.
Oh, is that right?
Yeah, because we want to go to Germany for a few weeks. I haven't been over there in 4 years, so just go over there and go visit some relatives, and then for a month, and then come back. And yeah, my for reliable internet that I've been able to experience here, so
Mm-hmm.
that'll be much better. Yeah, probably not going to America, but I'll be November 2025. So
Oh yeah.
so you don't get stabilized and go from there.
Yeah, today we had one of those moves where the B point for the 261 lined up with the 61, and I managed to grab that really well. And everything's been trading back up to that 261. Everything's been accumulated in this area, and I think that what we're going to try and do is move it to the old node up top. B point's already been hit. Next time we get to that 61, I think it's going to be choppy, and then we'll make it through it. moving up into the red zone there. Through it. As I said, I want to see it in that range up top. Now we should be through the red bar. People are basically being chopped out of their positions. I think that we might see another one of these pushes again. Get us into the green zone above. I'd like to see us that range again. Drives on the short term played out. That's fine. Because, when we put a bearish pattern on top of people's positions, you can count maybe 20% of them out. And they're not going to be able to be sellers in our way. If it doesn't come down as low as it did originally, it was just part of the uptrend. I think that's just what it is. A trick. Scare people out of the trade that they're in. If they know that this trade is worth 61 and more, hundreds of points beyond it potentially, this redrives pattern, which is a bearish reversal pattern, is not going to scare you out of your position. And ironically, for the people of the three drives pattern, it managed to come down 1, 2, and 3 back to the first of the. You see that a lot. Subject to change though, of course, like understanding that changes it. And it's different ways and different methods and different techniques to figure out that change every single day, but in a logical way. And there's a set of tools that are necessary to be applied across the board. Be that when it's responding to certain ones, gives us an idea of the environment, its intentions, exactly how we can position ourselves for those intentions, but then being in line with the markets as you intend for them to be, and you basically are alongside them, then that's exactly what you want to be at all times. You never want to be like maybe, it does what I want it to do or anything like that. It always has to be definitive. And I find a lot of individuals will struggle with that because they all have this kind of underlying belief that there's some randomness to it, and that consistency can't be maintained on a regular basis. It's impossible. And I'm like, well, maybe if you just have one strategy. But if you understand the market moves, effectively using multiple strategies, and they're all quite simple when you really get down to it. And over time, if you've been watching it and watching it and watching it, you'll see that it moves from phase to phase, and different methods are important at different times and in different areas. And it's important to recognize those areas where you can expect change, because change is important. It's definitely not doing the same thing over and over again. And when it does the same thing, it may not give the same result. That's based off the environment, of course, and how well you understand it. Depends on how you can be exposed to that situation effectively. But right now, it's still grinding the high of the node here. You can see that we're putting a lot of volume into this POC here. It's been relatively even on both sides, except for amount of time that it's spent on the side. Incredibly minimal for the time that it's managed to spend on this one. Remarkable how even it is. Yeah, when I look up here, I can see that we're just beyond the 61 and it continues to come back to it from the other side. But the chop in that area that has the least amount of volume, hard to hit that beat point in there. What do you think seeing again? Another thing that we could look for is consecutive highs. Not going to happen quickly, but as there was three consecutive, well, they weren't consecutive lows, but there were three major lows. The last one was slightly lower than all the rest of them. And it was clear on that they were accumulating for the breaks of the yellow lines. And slowness is not so bad right now because just like throwing a bearish pattern in the way, throwing a crappy playout and a consolidation, beautiful. Because the consolidation gets more long traders out of the way. The consolidation puts the three drives players under pressure. If they didn't take off enough profit on the first of the three highs, they're squirming in their seats right now. That's the ironic part. So anybody that trades options and stocks is likely to be in that position. They can't protect it quick enough. So it's intriguing to see what it's doing to the people that want to play a simple pattern, assuming that it's going to be fair amongst this range, and I think it's not. Been going back and forth between a WAP the entire time. And that relationship with that VWAP is coming to an end from.
So John, I gotta roll, man.
Alright, take it easy.
I'll be on for that once. You guys all have fun out there.
Okay, good luck. Yeah. Easy. The blue line getting tested from the upper side is something I think will be part of the future regardless of the break of the yellow line, okay? So the yellow line, it breaks, but it breaks with not as much significance as you would think. What I plan on it doing is it merely being a fake out, actually. The name of it wanting to go sideways when it does break. The blue line, however, could have a nice retest, which is asked backwards if you are to ask Google, about this pattern right now. And all the shapes that every human has drawn about the market when it is doing this is not to go down, but yet it is not to go up, but yet I think it ultimately will go up. Contrary to popular belief, as if you type in rising wedge into Google, tell me you don't find these, essentially those two blue lines everywhere. This triangle is what they would call a rising wedge. And under no circumstances is it supposed to break the top line, which it's doing right now. I'll just do it real quick. And if you can find another pattern that suggests that it's not a rising wedge and in fact something else, the idea that we could go on to break this line after we break the support line, absolutely fine. Some sort of fake out, like I said. It's basically what its intention is. Try and make a move like this. that's the biggest support line. And what I look at this for is I look at for this line to be a readjustment. Basically, ultimately it being like a fake break, ultimately going sideways, like I said. This could be the move that defines the area that it goes sideways in. And I can't help but notice that it is the case that we've moved roughly the same distance out of both sides of this range here. Like if you look at the green zone and the red zone, and the distance that we've moved beneath them, essentially very similar on both sides. We can see that we're running into the bottom of the node, and that's the red zone to the range. Obviously, back in the day when this range was made, it was used for a consolidation where the high of the node essentially was in the red zone and the low of the node was in the green zone. Now, basically, we've spent more time on top of the red zone than we have in some time. But the distance that we've made being equal on both sides shows that the market is still, identifying this range as something that essentially has the ability to be a barrier in the future. And now that we've put a short-term node on top of the red zone, when we get above it, we will be able to use this as a platform. As if it falls really hard to something that is so, I guess you could say, obscure, like not really, something that's like standing out amongst all things, really. Like it's something that's like noticeably standing out as a barrier or a wall in the short term. The only reason why it was created as one in the short term is because it actually traded here in the long term. So it recognized it in the long term and started that node, and it just so happens to line up with exactly where it would have ran into all of the trading volume that happened when we were trading in this range before. And it started by essentially ending this relatively large dump, because you can see that, there was a relatively large dump, bigger than any move that we have on the screen. And it essentially stopped being down at the point that it ran into this range. Everything in the range to this point has been bought back up to that node. Now that's an interesting fact, that everything was essentially bought back up to that red line as quickly as it was sold off. Suspiciously particular, I'd say. Now, of course, that's not always the case, but it is this time. So, will we continue to see chop at this level when we get here? Because it is only the level that it has been the most comfortable trading. Out of any other level on this, it has spent no more time than any. Like it's been here for the longest. This essential area in here, and we spent some time up here. Essentially, that's actually an interesting view. It comes from the beginning of that trend and contained us for so long, and now is being used as something to support us in conjunction with the node, in conjunction with the red zone slope. And it's not like the first time we've used that as well. Because when we go to the low of this node, what is the most common thing to do? To the other side. Trade back and forth between the node. Ironically, what it has done is merely spiked and wicked beyond the high of this consolidation, just a tad more, so that when it falls back to the original point that it did on the third drive, it's a little bit of a bigger move. But ultimately, what has its purpose been? Well, we've added more volume to this range right here, and it's very, very, very tight. An area that honestly, like, think about how much volume we would have to put somewhere else to make this seem small. Abstract idea. Like, how much time and space and volume will we have to spend up here to make it rival this node? Possible. At the end of the day, right now, with the current point of the day, we're losing the ATR, which is the average size of the candle, basically. It's come down from a 13-point candle down to 6.6 and a half. So that's pretty significant. Doesn't mean it doesn't go back up, though. Of course, it goes back up. And a time for that to go back up is appropriately between 1 and 2 o'clock, honestly. We can see that the market has slowed down here, roughly, right? Around 10 o'clock, which is kind of normal. And then when it did slow down, we didn't continue to slow down that much. Like, I guess this movement here was very volatile in comparison to the rest of the range. It maintained that slowness. If anything, it got a little quicker in here, but that doesn't on ATR at all. Maybe a little bit, I guess. But seeing that increase again, maybe to about 8.5, higher for the end of consolidation here, which I do believe is coming to an end. So now they went through, interestingly enough, one bearish pattern. Here's another one, a head and shoulders, and I do expect it to ultimately get through the head. You can see that there's a head and shoulders here. The head is right here. That's the high of the rising wedge, which is another bearish pattern. So we got the rising wedge bearish pattern. We got the 3 drives pattern, bearish pattern 1. And then we've got the head and shoulders, which is a bearish pattern. It's going to be crazy when it goes up. 3 patterns right there that I can see that are bearish. And not to mention that it's, evenly spiking on top of a red zone that's related to a green zone that's below. Very curious about that. I think that they're trying to convince people to put their stops inside of the low volume area, because they're going to be shorting one of these patterns, right? When they short it, their buy, their exit order is a buy. So they'll be like, buy here, I want to buy down here. And then essentially, when this buy gets hit, the people that were actually sellers are propelling it at the best price. They're becoming buyers at like the price that nobody wants to be a buyer at, right at the top. Taking on the most amount of risk if you're getting into a position there. But if you can convince people to put their position stop on the head, usually what we do is we come down to the neckline real quick and just be like, oh, you're missing the right shoulder. Oh no, that gets a whole handful of people in there, and then the people that are in from here, they drag their stops down. They put it on the head, and then the people that are getting in late, they also put their stops on the head. We get them all at once. So. Fear is fast, ladies and gentlemen. This does not seem fast. You think people are like panicking, get me out right now, oh my goodness, or like, oh geez, like, this bearish pattern, everybody flood into it, right? Dumpage like this right here, that's when we're in business with furious sellers, right? You can see when it's like that and it just dumps off, it doesn't really linger around at all. It's straight to business, doesn't retest at all. Doesn't say, oh yeah, by the way, if you forgot to get out of your position, just here you go, nice little retest at a high so you can get out of it, and then we'll go down. Make a bunch of easy points for you to get out as well. But no, it's very unforgiving. This is characteristic. Now, I'll tell you one thing. If you can look up the pattern head and shoulders on Google, type in head and shoulders pattern, you're going to get the shampoo. But essentially, you want to get the, you'll look at this thing. And this thing is never supposed to turn into a 3 drives pattern, and it looks like it just made a new high. That right shoulder just came to an end. Now, of course, we've done this pattern before, and it ends up going to the first of the three. Of course, the first of the three in this case is just a little bit lower, and it looks like it hit it. So we went 1, 2, and 3. I came back to the first of the three. Now this is something we've already done before, something we did there, very similar to this move here. 3. And it too came back to the first of the three. Just clear. Sometimes that's all it does. Or sometimes it can do more. But why would it treat people of such a predominant head and shoulders pattern like it did? You know, like I said, sometimes they like to egg people on and say, hey, you're missing it, you know, the big red candle, and then it's slow, and it's getting people to just pile into it. When it stops them out with one big go, they'll try and advance a little bit farther again and again. The idea is to try and get on top of this blue white line. Tough though, but we're trying to do it at the expense of the public. And it's not, I think it's incredibly unethical, but the way that the market likes nowadays, 2023. Back in the day, everybody used to be semi-professional, and you know there was no memes or nothing like that. And yeah, market treated people a little bit differently. And now you can see those same patterns that have worked for years fighting the dust. I mean, like, why would an average person, right, change their strategy? That's the last thing that they do, right? They're all about like do your strategy, make sure you follow every rule, right? And and like they don't change when the market does. And if they're following that strategy and they've seen the ones in the past, what about all the ones that are? Why would they ever want to change it? Like you think, you know, the guy across the street is making it fail on you because he wants it to fail, or has he been using it for 10 years too? You know, 25 years as well. You know, who knows? And all of a sudden he wakes up and he's like, oh, you know, we're going to change things today. You know, with the power invested in their personal account, they've decided that things change, and somehow everybody else unanimously decides the same thing. And now head and shoulders don't work out as they did. Now they end up making the people associated with them fail. As how is it ever supposed to create these patterns if it doesn't fail head and shoulders, huh? Because in each one of these patterns, we go through the head. Because at each one of the patterns, it has made a high with a higher high, and at one point it was a lower high here. And we did it here as well. High, higher high, and at one point it was a lower high. It wasn't pretty or nothing, but it was a lower high. And you know, this one, honestly, the most impactful one, and it blew right through it into the perfect third drive, where you can even see that the two distances of the drives are very similar, which they don't have to be, but they can be, and they are in this case. Well, they may continue to be. That's the idea. But it's nice to have an idea of exactly all the moves that we've been seeing present here, because I'll tell you one thing: has any move done anything but add volume to the node? You know, they're really winning on these bearish trades, aren't they now? Because it's not really moving very well at all. It's moving slow, and it's egging people on, like I said, to be able to get positions to really, you know, they're suspiciously clear, and they're suspiciously not working out very well for anyone associated with them. That is the irony of the situation. And the whole thing is added to the consolidation, which essentially when we were in the rising wedge, that was the whole point, is that it starts to be some sort of fake break because the people associated with it, they're not very happy right now. Like, imagine, you know, you're in from here, and what's it really giving you? And have you taken it, or are you still waiting? You know, and if you're still waiting, it hasn't been very comfortable, right? So, I mean, let's just like, understand that some people are going to be worn down by this environment. Other people can just be enduring it as we're waiting for them to get out of the way. Out of the way for the end of the day. And it's interesting too because a lot of individuals that you know they're used to you know going to have like set times of day where you go in and you finish at a certain time, and then they have comes to trading, it's like, oh, I only want to do an hour at the beginning of the day. Got so many things to do. And it's like, well, how do you expect to have an edge tomorrow when you do that? I'm like, it doesn't. It's a very interesting culture that I see is very common. It spreads very quickly. Um, it makes it easy for me though, because at no point do I find it like that I can't put some work in or recognize some similarity or some sort of movement that is in line with something I've already seen or something that I expect to happen, like this consolidation. But understanding the value of being exposed from 261, that's been worth. That's been the name of the game today. And clearly somebody else is also feeling that way. There's been some decent accumulations off of that. See a lot of W's very clearly, but not a lot of M's. If I'm just looking here, and I'm like, the M's that it did try to make, I'm like, this is the closest thing to an M that it's made in a long time, unless I'm missing it. I could be missing it, but this M over here is probably one of the better ones. And guess what? It was part of a giant W, which we do get. I mean, that's the thing. We do have that, where the M's and the W's will actually have. I'm gonna try it again there. I'm like, got a little W on top of the M. And it's like, it's not like we don't get that. We certainly don't get it every time. It's something that must be allowed to happen, you would think. God forbid you prevent that from happening. The event that you were expecting it to simply make this, it would be tragic to get knocked out because of such a small difference. At least that's the way I see it. So it's like it's good to have an idea of what could make one appropriate more appropriate than the other. And of course, if we've been seeing it very clearly, that's one thing. Another thing as well is the size of the pattern. If it has the inclination to make a large enough pattern that can house an M or a W, can it do that? Like I suspiciously look at this one here, and I'm like, well, what about this little W up in here? I'm like, I just mentioned this is the closest thing to an M that we've had in a long time, and I'm not gonna lie, it just comes from a W, and the W had a little M inside of it too. Like, okay, that's a fact, though. So I'm like, as strange as it sounds, it is a fact. So I consider it, and I'm like, okay, can that impact our next analytical method? And what was the W's playout that it finally got to? Like a 141, perhaps? Something that I wouldn't even consider this truly played out from the W, something that we could see future. Hey, I just want to point out as well that this B point suggests a 261 all the way up here. You know what? I'm going to go ahead and mark that. We'll take, the 61 is at the 188 200, which I do admire. Well, but another thing that I want to look out for is this pattern that we were seeing earlier on the really short term that that one, because this has been the most common method of doing this pattern. As strange as it sounds, how common is it that we see this? And if this has a characteristic, is it not best we understand it? you know? And another thing that I find interesting about this is in the event that the VWAP turns up, we can actually get an all-in-one. So for the people that are just maintaining exposure, the M turning into a W could be on the table. I am curiously watching this level because this level below, it does have the same distance as our confines of it, we could be interested in making the spike go to the other side. And that's another advancement towards the failure of this rising wedge. I mean, yeah, sure, it came down a little bit more than what it did before, but hardly. Was it a 50% retracement? Not even. Didn't even come back half, so usually it comes back a little more than half. Now we're in another head and shoulders, though. Like everybody want to try this again. After how many times we've seen a three drives formulate, laying it out a little bit and then screwing them over. That's the way to do it, in my opinion. And they should follow suit. Like the people that chase the blast get wiped out in the process as well. And it's just adding more volume to the node. In the grand scheme of things, is it not continuing the chop from the rising wedge? The chop that's almost done. From what I can see, it's almost done. We're trying to clean it up the last little bit here. So the playout grabs the chasers, and it's a little bit different than the last one too. It's not the exact same thing, because the exact same thing would have been no playout first, and then it wrecks everybody. But this time, it's like it's trying to egg them on, saying, "Hey, it's different." Meanwhile, anybody associated with it is just part of the node. Or how good has the node been to the people of it? And I mentioned this before we got into this consolidation, and as I mentioned, it's a great spot for it to get stuck because it loves being here. It only has been here of any other spot, and that is a fact in this environment here from on my screen. Okay, like it's obviously been more somewhere else, but to here, this is the spot that has most volume. A spot that's likely to be seen again regardless of this. Yeah. Testing the view out from the underside, the white line. Short-term consideration. I can see that we're inside of a gap right now. This gap has otherwise been, something that we haven't been able to trade within very often because it's so interested in moving back and forth between this low, which has been traded at quite a bit. That's why we've got a node there. We came back to step on it once, and something of the similar sort is happening again. Also, a blue line forms. Getting on top of that blue line, in this case, is a direct ticket to the top line. It is some time away. The blue line getting its test from the underside and increasing the size of the node on the low. We're roughly in the 61 area here too. We want to find that 61 test from the underside as well. Normal to see. Can't help but notice we're at the support of the original symmetrical triangle as well. You can see we're inside that blue line now, testing it from the underside, and we got on top, and that's a ticket to the yellow line. We gotta watch out for a little bit of chop on the way there. That's about it. We tested the view out from the underside as well. Anybody that keeps the stops safely at the extreme is still in the trade. And if you took it from the 61 or the underside of the 61, it's not a bad place to consider taking profit, as this is the spot that it likes to return. But keeping some for the break of the yellow line. So the little play out that we saw from that rising, or sorry, from come down in the short term to a 61% retracement, but look at what they're doing with it. Was it the trade to be on, or should you have kept it low? Question. But we can see that the blue line was indeed to take it through the yellow. Minor consolidation, if any, has been seen at the node this time. And its interests are far different than ever before, because it's incredibly unlikely that that was the unanimous decision of the public. But rather, the public was positioned for the downwards move, and I think a lot of them are stuck right now. And you know why I pause this here, I think? Because the people put their stops at the head originally, right? And after all that, after they saw a taste of the profit, you know what they're going to do is they're going to try and drag it up a little bit. We're waiting. We're waiting for them to drag it up. They'll lose that integrity. So that when we push it higher, we can get more people at a higher spot to buy. So we can already get so we can get more movement upwards on top of the accumulation that's been happening at the lows. And we're using the people against them against themselves now, essentially with the lows being captured by the institutions continuously, as I've been mentioning all day, and the people trying to fight against it with these bearish patterns that show up on Google, all of them being put into a really sticky position against the institutions that move the markets with huge candles like this, as we can see. That movement was very particular, came back to the blue line off of the 61, and then crushed the yellow line. Honestly, that could have happened like this, but it didn't happen like that. Very interesting. Like they shoved them out of the way this time, harshly. And the average individual and their integrity is based off of their ability personally to be able to maintain. And the average person being able to continue with a consolidation like this, they're only getting weaker as it goes on. As the institutions know, we're only getting closer to the end of it. The people think the exact opposite, and it's not uncommon for this to be the way. But you know, the institutions all started as an individual. They understand the individual. They think about them all day long, as we should think about them. Or else how do you think they make all their money? Not the individuals, as I say. But it can work in reverse, as you can see as well, if you position yourself as they do. And having the same expectation, inclination, you know, is key. And you can see by the end of it where the largest orders are. Many people will be chasing, may have to deal with them, taking a lot, but honestly, the position has been accumulated, I can see. And they're interested in making it go higher, but something is in the way and they're going to deal with it right now, I think. Allowing that to happen is fine. Like the retest of the yellow line, acceptable. But break of the blue and white line is a ticket to the test of it from the other side. So no matter how large of a move we get, you know, even to this level here, somewhat likely, we don't want to drag any stops above its, in its capability of being able to test this line. I don't care if it's from here, I don't care if it's from here, I don't care if it's from here, or even here. Because it'll just take your position. Most likely. Sure, I suppose you could say that's my opinion, but, you know, it's a tough one if you drag it up there. Also, I can see that we've made 3 consecutive highs in a very interesting way. Is that uninteresting? We went 1, 2, and 3. Yet, in this consolidation, we can see that everything is expanding in nature. You know, the lows with the lower lows and the lower lows, and the highs with the higher highs and the higher highs and stuff. And it's expanding outwards, essentially, like, like that, essentially. So interesting to me too, because not the first time that we've seen this pattern before. How effective it can be when it wants to be. What's the? Is there much difference? Just a different shape slightly. What we can see down here. Yet it's intriguing that everybody that was associated with this one is either a buyer or a loser at this point. It's ironic because it was a fake out to the maximum. After consolidation, it was just nearly. I mean, it was a tough one. That consolidation didn't offer much the entire time. It wasn't a very wide consolidation. Like essentially, if you take a look at what's happened, we went from being able to move like this to being able to move like this, to being able to move like this. You know, we just doubled that range and basically came back. It was 188 200. I wouldn't, you know, but it was also a usage of the green zone again, and everything associated with that green zone has been bought back up through the red zone. You know, it's not like the red zone is very strong if you really think about it. Like, what's up with that? Is which one's stronger? Would you say, green zone or the red zone? Biologically looking at it, we can see that the green zone, everything gets bought back up really swiftly. They don't mess around. But then the red zone, it's like we might buy back up through it. It could just double the entire range randomly. Like, look at that. It just doubled it. It was like, all right, we'll double the whole move. And then half. This is normal half. And then look, it failed to double it again. But instead put people to the test and gave them that move against. Remarkable how similar. Retested the yellow line. And it's ironic to me because we've spent the same amount of time outside this little range. Like that. So is it enough? Becomes the question. Certainly, it certainly suffices, in my opinion, for the amount necessary to move outside of this range. And if that's not clear, I'll make it clear. So, like, the idea that we have this area right here, that's like our range. I know it's exactly parallel, but it can be. Honestly, that blue line, uh, but regardless, that is the range that it's using right there, and like this. We've seen this before. This has been used in the past. Look, it did it here. Very similar in many ways, including the fakeouts that are associated with them. Now, it would be a first that this fakeout would ever be able to clear a high. It wouldn't be a fakeout at that point. Every other time it's ever done this, been one, ironically. Every other time it's ever done one of these gray bars, and this move it has never done this large move up. You can see that the VWAP is very close by as well, and it does ring a bell of being kind of like an inverse right shoulder. I mean, if you take it as it is, like left, head, right, and it's a rough pattern. Like it's the VWAP, I wouldn't trade it or nothing. It's just formed, basically all I'm saying. And it's the same pattern that we saw here in reverse. Yeah, that one went down like there's a lot of similarities. Like for instance, let's take a look at just the head move. The head move, basically from here to here. Right? We did that roughly the same. Give or take a couple very short, a little bit larger. Almost like for what it cut, what it had on the head, it's made on the shoulders. That's fine. Ironically, after all we've seen with head and shoulders, we're closer to the next one failing. After all, people quite sore with them because they haven't been working quite well. I guess other than this one was quite effective, not gonna lie. You know, but it was positioned terribly, and everything that it offered was given back almost. And if that is working, then you know, to some people that's working just fine. But end of the day, it's done. So you know, hopefully the next thing is working as well. But for the people that captured the lows and have maintained them taking off profit as we continuously hit barriers like this POC, allows for a safe exposure to any gains beyond it and a return back to the long-term VWAPs above and all of these B points in here that I don't really consider tested. Now let's take a look at them. Like, are we like in this one down here too? That one. Take a look at this here. So first off, we've got this big one, right? Big one insinuates that you know, we haven't quite doubled that range, right? We went down to a 161 and returned back to the 100. Now on the other one, we've got a little bit of a 261 also has been used many times. Everything got back up to it. Ironically, we've come back up to test what is the 188 200, and this is a common level to test back from the underside. I do believe we're actually going to break of it relatively. And it may be on an inverse head and shoulders that actually gets it there. I'll see if continue to chop into this range for a little bit more, or if it wants to get out of it. Matter of time before VWAP's the worst place to break your trend from, and the worst place to position yourself from. So it's essentially good for the people that are already exposed, but it's a good spot if you've managed to hedge it down at any point to take profit. You can see how many times in the short term, if you hedge it down, you know, getting back to this general VWAP area has been very, you know, it's been like even in the short term, you come back down to that level, you're not getting too much past it. You know what I mean? Not getting too much past it. In this case, you know, it started to become a little bit more like very, you know, predominant, and it remains the case that everything past it has been bought back up to it as swiftly as it left it. Will that continue to be the case? Is the question. I can't help but notice that the support line, this triangle, it's been tested again, and it is the parallel to this high. And in that case, it's intriguing to me to see what the medium bar would look like. You know, and it gives us the medium bar in the center, shows us the 50 and 61% of this entire range. 360 just to avoid, some clutter on there. Go ahead, just ironically, even channel to the upside has it insinuates that further consolidation could be made on the fact that we could make a head and shoulders after the inverse. But what we did to get into the inverse is make a three drives pattern. It didn't make a head and shoulders through an inverse head and shoulders. It made a three drives pattern into a inverse head and shoulders. So it's not exactly the same as what we would see. In fact, it's incredibly different in many, many different ways. Of course, the first thing that we see here is that the head and shoulders that it originally made failed. Make the head and shoulders. And essentially, that really puts a lot of weight on the entire pattern because if one of the sides of this pattern is failing, the other side may have a little bit of trouble also. And I question, how many times have we been making 1, 2, and 3 into 1, 2, and 3? And that creates this kind of like expanding wedge, right? So who's to say that it can't make 1, 2, in one like this in one move? Because is it not true in this schematic that it makes a low with a lower low and a low with a lower low and an even lower low, three drives down, but it also makes a high with a higher high and an even higher high. And we're coming out of an environment where it's used to doing this. And it's not incredibly different than that. The same amount of movement. See, it's just a little bit more volatile ultimately. In this case, I can see we are having that, increasing effort at expansion. So it's just good to notice that the three drives pattern has been happening a lot lately, because if everybody keeps going for it to make this, because it's obvious, that it makes this all the time, I mean, when it starts doing one of those things wrong, to either do this or this, low should be a little bit lower, but yeah. Um, that this one, there's a lot of similarities to what we would do here. And, I find it remarkable because in this sequence here, this is how we would make an S wave. Because it's true that many times after the head and shoulders would play out to a new one, the inverse would take us back up, hit the underside of that pattern. Not what we're doing essentially right now, but something I've done. In analyzing this, it's not quite three drives, but back in the day, we used to get something like this called, it would have a head and shoulders, but the right would be in between the head and the left, and it's a very controversial pattern because it's essentially failing mode, the head and shoulders, but it's not quite a three drives pattern yet, and I can't help but notice that that's exactly what it was interested in doing there. A new trend has formed. Take some of the emphasis off the previous trends here. So again, we are in the smaller notice the blue line in the short term is definitely something of interest. Definitely a smaller move, but typical nonetheless. Testing that range from either side on um, both sides with even amount of move. Typical. And of course, this is that old 61 as well. Where essentially we traded back up towards it on one of the smaller moves. Getting that pause right now. Same kind of action back up towards it. Line also getting a lot of attention. Interesting to see it used the same way. More accumulation. Back to similar lines that were made before as well. Every blue line returned back to at the green zone. You know, it's the same as what I said about the last blue line. The break of it could directly threaten the yellow, and that's not the yellow that's broken, but the yellow that's currently in play is also still in play. In fact, I think that this level right here is incredibly important. It's not a level that most people would draw, but you have to have been experiencing this range and understand that that in fact is the range in order to be able to get exposure, exposure to that breakout start. So you can see that any like scalp trades are back to the blue line, and now we're through it, rivaling the yellow. But testing the blue line from the upper side is normal, so make sure that you don't drag any stops within its path of being tested. I was going to say, it's remarkable that we've put enough volume down here to rival that one up top, but it is not the case. It's the volume, just considering the volume in here, it's actually put a lot of effort into increasing the size of that node. You can't increase the size of that node without trading at it, so is it so inclined to do that? Or, I think we'll see it again. What's the value of breaking the yellow line if it's not getting back to the VWAP? And where would be the first of the three lows in this case? Would it be this one? This one? Because at the end of the day, it's not an exact clear three drives pattern, proportionally distributed. But it does have two very clear lows. Could it be only the second of three lows becomes another question. So off of the VWAP, an entirely new low could be seen. Basically, the first move could look like green zone, red zone. And some struggle at the high of the node could be on the table as well. Definitely find that. Obviously, if you didn't drag your stop above the blue line, definitely interested in the space that it has between the blue and the yellow line. It would be quite intriguing if they denied the same movement out of the bottom of the green zone that they had out of the top of the red, but instead chose to break the shape or form. So, like I said, it could be the second of three lows. This is the third low, so I'm intrigued about the first of the three. Which basically could look like another test of the line. Got enough space for a secondary low in there as well, so I'm gonna keep that in mind. Like it's essentially doubled the range down. I think that that's pretty important here. Doubled the range down exactly. And that's the 200. We can see there's a 261 slightly beneath it. Which both of those levels have been notorious for creating that first out of the two lows. The secondary low is going to be that much closer to the downtrend and a lot easier to capture than the first low. First low is essentially like a falling knife. to the 188 200. This could be the formation of that first low, like I was talking about. The secondary low could be a test of it from the other side. And of course, that could take, as there's still much time. This blue line becomes a very intriguing one. And then I do believe we'll see again today. Value the break of the yellow line, as it's impossible to get back to that line without breaking the yellow line. So the secondary low that we formulate can get us through the yellow line and back to the white one. Effectively, everything pulled off below it accumulated back up to it. But it won't be quick. Secondary lows can take time. Because like the M can make a W before making this back. M has B points of its own. Fibs of it. They coincide with relatively large fibs as well. Fibs that are basically insinuating that we are back at that level as a result of everything accumulated in this area down here. Basically, this B point here, it may be the second wave looking like looking low, but essentially on the wake of this major downtrend, the B point is like end up looking like an S wave. The secondary low could look like a fifth wave, and we haven't even gotten off the original yet. the shorter term 188, not the longer term one. The longer term one is farther back one. Of course, it's got a 200 there as well. Yeah, those levels are related to this one, all the way up here, the original range above this one. And I can't help but notice that this entire consolidation, we've been trading in here, and it's made a spike out of the top, and then has a spike out of the bottom. Like that, which means it always has a downtrend to it. That downtrend, unless we're going to retain it forever, it is subject to breaking like the last downtrend. And in this case, the steepness has an impact, and it's relatively steep on the short term. But the long term one, it does have some time. Essentially, if we take back this move as swiftly as we did this one, basically this entire pattern could be formed again, just in reverse. I still believe this is the first of the two lows that it could make. Second low maybe slightly higher than the first, but that would mean that the fifth wave is truncated, and sometimes that's the case. 1, 2, and then 5. So from here, we're here. Typically, the first wave likes to produce itself out of the fifth. Not always. Lately, what we've been seeing is 1, 2, 3, and then 4, 5. Make it something like that here. But getting through that yellow line to get back up into that range by this whole pump back is on the agenda. And it's not going to be on the first pop either. Like I said, the secondary low, we could form. Likely that we're trying to test the waters right now. Just get everybody right where we want them. Getting back to that blue bar is basically in the way of everything else. So it's something that I'm, basically how do we get to it, not if. I admire how small the node is down here. It's like not getting a lot of people, which is a good sign. You know, we're closer to breaking that yellow line than ever before, and retesting those green lines here from the upper side. On command, institutions understand it should be done a certain way. Testing it from the other side, just like that, because they have them too. Or else the people just know about it. Unlikely though. Why is it going to go break the yellow line with the people of this move, with the particulars that I shared? And very black and white. I'm like, what room is there for other strategy when it's that clear? That's what I want to know. Did they land the nail on the head like that? It's very unlikely, but it's likely that the institutions are moving it by force. And the blue line, blue bar, all of this move accumulated. And that little hump in the bottom there in the volume profile, there's now. Could be yours too if you follow the same strategy. Should be. And if it is, cherish it because it was hard to catch. It took lots of time, patience, discipline, accuracy, precision, understanding. Now the blue bar. Why did I post the only time on the thumb here? Last post was at 12:34, high of the range. And why does it respond to the blue bar with absolute precision, like it's got everybody out of the way? And anybody that's chased the move is now being put to the test because they didn't deserve it. Anybody that's caught it is safe. Chasers get caught back in the retest. Call it the chaser eraser. But it's like if you knew exactly where to take it to exactly the point that made sense, why is it that the blue bar was the consideration? Now it's to break the blue bar. Just to be clear, to break the blue bar. It could take time. Now the blue bar is a consideration to return to. We can see it offers even more to those exposed to the range above. Is likely to be a large S wave right there. Yeah, 148 right here. Somebody else could have the same idea. They have a lot of money. Because this is the power of pushing everyone else out of the way. Because this is what it takes to get a move like that. This is what it takes for somebody to be interested in making a move like that. That's the irony of it. The red yellow line is a target break. We clear every bit of sellers out of the day by the end of it. Maybe not by the end of it, but ultimately, it doesn't matter if that's a movement that it's doing anyways. If we're either part of it or not, and being part of it, he's keeping your stuff at the extreme and allowing for the chasers to get knocked out. And unless the market makes an entirely new extreme, you're in the position. You can take off enough right now to make sure that you're safe to do that. Like if you take three and you took two of them off right now, or at the blue bar, better yet, you're safe to continue holding your exposure through the entirety of the reversal, which could be hundreds of points beyond the target that I set for the intraday move today. That's the idea.
is showing some sort of obstruction as well. And the people are trying to chase it right now. We have to deal with them. After all, it tries to get off of its feet where it didn't before. People see this and they try to flood in. It invites to move, honestly, to try and clear these things down here prior to getting these ones up here, which is fine. And like vice versa is fine as well. But it means if any stops are dragged above this level, it expects you to have accumulated at the point that made sense and to continue holding through the pullback. So anybody that just luckily bought along the way or luckily landed on it, no, they don't get it. And I mean, like, where is the room for the individual strategy right here? Is it attracted to the chop? Moving average is twisted the right way. And I remember what I say about this blue bar. Next time we get into it, breaking and exposure to the red yellow line, and every single bit of sellers is being bought back up. If it decides to hit that P point first, we could have a major retracement back down to these levels before we even continue. And just because that's a risk, it means having taken enough profit at times like this is key to safety. And do you think that the name of the game on the institutions side of things is let's get in there and make as much money as we can with the individual? So it's safety. It's about reducing risk. It's about making sure you have an understanding of the situation so you can remain exposed and continue controlling something that you understand and something that you want to be in charge of because you understand it, because you want it, because you have control of it, because you have a say, because you have an impact. What else could it be then, if not that? How could they have a better way of doing it? I'm trying to think, and it's like, I'm sure some hedge funds don't do it right. They're not the ones I'm talking about. And I do like the idea of putting this entire move on the other side of the red yellow line. By the end of it, heavier movement out of the slow is totally possible. So increase in volatility. I find it intriguing that it came back to the blue bar like that. You got my blue and white line next there. Interesting one. I want to step on it, on top of it, but take some time. After all, we're rivaling the middle. We can see that it come up off of a 188 200. You can see that the 188 right here, that 188, right, goes to this level right here. So it literally couldn't exist without it, okay? Right? And that right there, 85 points up, okay? That is the low of day. With absolute precision, not a point off, literally on the dot. And it was a 241 fib. You can see it didn't get a point past that either. Ironically, here we are closing the gap on the S wave. This is that old 61. And honestly, I'm gonna do this, turn it down a little bit. Not as important, but I want to test the blue from the other side is fine. Just a step and that's it. Step on top of everything. Push everything out of the way and step on top of everyone. That's the idea. Yeah, it's interesting. Taking time is okay in the middle. It's the worst
place to trade. And it's not even the actual middle. The actual middle used to be up here. That's the heavy volume node, where roughly be what, 78% retracement to get back up there. We did have a heavy volume node in here before as well, so coming back to the B point after a test of the upper side of the blue is absolutely okay. Now we can see as well that there used to be a channel here, that channel, it played out, got to these green, again, just like it got to the green here. But did it return back to itself? Not yet. Ironically, that would look like a 61% retracement of the entire move. And the 61% retracement be just above the B point. You can just mark it to avoid the clutter. The B points down below can be hit at any time. That's why I say don't break your stops above it. If you do, it could cost you your position at the low and you might not get it back. As hard as it's been, the harder it gets for the individual, the closer they are to giving up on average. And you don't want to do that because it's not it's not the ticket to the best moves. The people that catch the best moves do it intentionally. That is one that I would say would be hard to get due to the fact that it's taken a lot of time, many moves, many lows, much patience, and now the test of integrity. For those that do have it, and you keep it when we do this to you. It's cruel, really. But I'd say it's better to have an understanding of the danger than it is to simply avoid it. People are like, oh god, volatility, I don't want to do that, right? I'm like, well, volatility is how you make money. You need movement. If you don't get movement, you can't make any money. I mean, like, you better understand the movement when it happens. That's where I come from. I like the idea of maintaining control when it makes movement instead of freezing up. Like a lot of people get into this, oh, I'll wait and see phase, and excuses start to come out of everywhere. Like I hear a lot of excuses on the trading floor, especially reasons to end the day early all the time, and reasons to stop trading. That's basically the thing. And it's like what really matters to me is like if you test that and it's like, well, let's say for instance, say you're done trading, but do you focus on exactly what the market is doing so that you have an edge for when you do trade again? If the market's willing to make moves and you haven't acknowledged them, it added disadvantage to those that have, in my opinion. It's like playing a game of chess and saying I can still beat you if I don't get to be, I guess no, you just calculate their moves. But if you didn't get to see the moves of the opponent in the game, you're at a disadvantage to us where if you could see their moves. It doesn't have to be chess. That was a bad example. Because you obviously would change. But anyways, the idea that we're making a right shoulder to a head and shoulders right now, I'm very, very skeptical about its ability to play out. It ends up being just like a move like we saw in the morning. Sideways, pop to the top, another sideways here, up to the bottom, like that. Like this. That one. And in that process, this should formulate. We fail to make any kind of pullback can do it later, but it's not safe to drag your stops above this while it can make this. I'm not saying you want to trade in aspirations of making that, but essentially the trade was from the bottom to break all of these levels and to take every bit of selling back. The return back to the middle for the S wave has to happen on continuations through this blue bar. Ultimately, I believe we'll get through the entirety of it and get to the other side. I think we'll get to the other side double the range like we did before, and a little bit more. This level actually. Oops. So, and I'm gonna make it clear. What I will leave though is this medium bar, because look at how it just snatched that in the middle. Reminds me of the one that we saw here, the gray one. Okay, so this one I can put darker. It's funny. When we formed this pattern before, it did this. Well, curious to see if we can get that same kind of movement. So far, the head and shoulders part, you know, this part, that's very similar. If I take this over, and on the left, on the right, that's essentially what the may not have as much of a pullback though. I don't think it's making new lows as a normal thing. I think that also maintaining the highs and being able to break them, you know, it's basically doing the same thing over again, except it's going to have a completely different result, not come down. And what down there is likely to be part of the accumulation for the ultimate upwards move, which is harder for people to get exposure to and likely to be more valuable than things that have been given to them today. Testing the waters on this one. see if they can find an opening, but it looks like people are chasing as per usual. And it's like with people chasing, they most certainly won't be able to make it to the red zone. So they need to get rid of them. Which means that they don't only have to think about the positions that they have accumulated, the position that they or the exit that they want to get for that position, and the people that obstructed from getting to that point. They have the ability to take control over a certain portion of people throughout the day. You know, when we can see that they've made it slow, that portion gets smaller and easier to control. And you know, towards the end of the day here, we can see we're getting a lot more institutional movement. But the thick upwards huge candles seem to be all buying. You know, we're getting very precisely in one direction. Like it's almost like one order, like 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 one entity, rather than unanimous decision. And just like when we go sideways, up and down, we're left with, oh yeah, it went sideways and it popped up, and the biggest move that everyone sees is down, and it's wrong. It's not the move that essentially you want to get exposure to. It's the reversal. Just like in a falling wedge, the majority of the movement is down, right? And it's meant to go up. It's like in a rising wedge, most of the movement is going up, and it's not a bullish pattern. Even a W, like when you short a W, you're shorting the high so it can come down. When you buy an M, it's at the low so it can come up. Yet there's this kind of like idea that the people uh, have when it's going down really hard, or when it's going down for a prolonged period of time, makes them want to continue to get exposure to that move. And they know they weren't there from the beginning. And when the market continuously comes back on people that were trying to be chasers, we can see all of these levels have been hit now. And now we've got new ones. Literally. We've done this part now. Can we clear them out? Does it move back to the blue bar? Secondary low. There's a lot of emphasis on this line. Previous yellow line broke. We'll go ahead and take that one off. Fact. Yeah, but notice we got some coming from all the way back here. Range. Go ahead and make these lines white. They stand out. You see that we've used them before to absolutely smash on top of these levels, those white lines. Now here we are again. Testing. White lines. Side of them. The inclination is to get through the blue bar without the people. Too hard to shake. You need to get a better guy controlling the market. But that was a joke towards the composite man. Yeah. Indeed, we consider it really tested though. That again. Because that one on the house, the people that were exposed to that B point are likely to spend. It's interesting too because basically the standpoint of the institution is not it's not make or break if we get the low, but if there's a clump of people down there that are willing to offer liquidity for the institutions, like they're going to grab it. And when people are gone, don't be surprised that if after hours we get some running, it runs a little bit before and then continues to run after hours. They just don't want people piling in. And if they pile in, they're allowed to pile in at a time where they can't sell. And that's most people can't sell after 4. Restrict themselves to securities. Trade from 9:30 to 4 and continue to hold them to like dark period that really like they lose a lot of control and God forbid something doesn't happen. Something happens. They won't be able to manage the decisions. But ironically, the things that you can use to hedge the positions on the whole, right at pretty much any time of day. We return back to that green line again for the second time. If anybody took that for the second time or the first time, you're absolutely profitable and you can decide to stop at that level. Now it's getting a little weaker every single time that we hit that level, and we're getting closer and closer to getting to the other one. Now what's ironic is what I've posted is for it to do something similar to what it's done before, except for it not to lead to a new low. Whatever lows are formed are likely to be popped back up and aspiration of getting through the bar. The blue bar is the big entity right now. If the people obstruct it, then more chop and spikes can be necessary, but they're thinning out the crowd heavily right now. Especially as the end of the day approaches. How many reversals have we seen at the end of the day over the past 2 weeks? That was a question. It's not even just at before the close, but 10 minutes after the close, we've seen incredible reversals, or even at like 8 o'clock and stuff like that. It's been pretty intense with the amount of dumpage you can make. Like for instance, if we go all the way back to the very, very, very beginning of this entire move on the downside, right? Every bit of movement that it's made, right, to the downside, it happened from this point right here, the 261. It was a 188, 200 range to this range right here, literally at 261 that it marked prior to the market closing. When it hit it at 23:20 Eastern and 1 o'clock in the morning, Friday. 1 o'clock. It's not the work of the American public, that's for sure. It started this big old dump that got us down to where we are in the daily. People that know about that 261 accumulated at it. Of course, kept it. Secondary low. This kind of range pretty easily. We're getting to the other side of that range could rival the yellow line in the short. Absolutely fine. Getting through the yellow line could serve the point above and the blue and white line, which could cause a consolidation. Of course, in order to get through the yellow line, and gauging the amount of space that there is, could there be a small secondary thing there, like some sort of double bottom line? Given the time, take the chance. Keep in mind that this 188 at the very bottom, when it goes all the way up to the secondary range above this one. 188 is the white line, the 200 is purple. The point that we've hit the 188 200, we've doubled this entire range. Basically taken that and put it at the 200 188 area. That's doubling it would be 200. Currently we're at the 188. And I can't help but notice that it is the fifth wave. 1, 2, 3, 4, and 5. Ironically, it started with the 3-wave move, and it may end with a 3-wave move. Could it be a head and shoulders to an inverse? Is that not what that is? And, in theory, you could say screw the right shoulder altogether. Go right through. That doesn't want to give people a chance to get in comfortably. Working hard to get rid of them. No right shoulder. Of course, every level's been paired up there. It's all done. Instead of this. It's listening, didn't make a right shoulder, did it now? But it made a head and shoulders into an inverse, but didn't let the right shoulder people get in, because it doesn't want them in. They have to be in already at the low. And they had to have the test of integrity all the way at the bottom. If you kept your stock to the extreme, you're still in. Again, it's tough, but this is exactly what the market did for the people that demand the best price. And there's no better price than the one at the very low. So it's very just the case. Now we could retest the yellow line, that's fine. It's just a simple retest. Doing some sort of trap at the blue and white line is normal, like I mentioned, we chopped there before. And completing the S wave after having made a W corresponds to the M on the table. Problem is people start chasing from right around here, so that's why we gotta go slow. We gotta chop them out of their position. How much time will it take before they give up? Just a matter of time. Most people. And they've got it down to a science. Well, they have to. It would be very good if they didn't. Understanding the people is key. As I said, they were the people to begin with. construction by the blue and white line is coming to an end. Its importance as well really becomes the blue line. As the retest is complete. Wow. Now it's complete. Can we take a step into a 5-wave move is the next major question. Still with the node. Ironically, this is a pattern that doesn't show itself very often, but in the event that we get that, the head and shoulders mashed into an inverse head and shoulders, very, very unattractive pattern, but I'll be damned if it doesn't form. It does. It's not on Google, but I'll show it to you right now. It's literally this low with a high, lower low, high, lower low. Make a high. We've got a high, higher high, and lower high. We got a low with a lower low and a higher low. And that movement can be seen here. I guess I drew that in as well, which isn't part of it, really. But it's not like it showed us that today. It demands that we're familiarized with it, though. I mean, is it not doing this portion? Because like in this big picture here, we have a move that goes up, and then it comes down like that, right? And then it does a smaller move right there. And we have a move that goes up, smaller move, comes down like that. A very similar fashion, what it did here. A very small short-term level of interest as well as this one. Testing it from the underside is incredibly as small of a move as it may be. Like, I don't know if something's wrong with that. What if it doesn't test it from that would be a big change, wouldn't it? So that's why I like to understand levels like that. Understand that small short-term moves are otherwise necessary. Ironically, after the short-term smaller moves, it's very tough on the people part of them because it demands that you take profit exactly at the small short-term target if you are scalping it. And those moves are very, very common. They can happen multiple times, by the way, as well. And of course, how many times can it happen without having to break the 188 on the support or the yellow resistance? The yellow resistance, I am very confident it will break. Doesn't want it to be. time that it breaks, it gets closer and closer to the red yellow line. The idea is any positions captured for the break of the yellow line could be exposed to the red yellow one. And the red yellow line is very attractive because it means getting to this gold bar above the final. And watch, the institutions will have the same target. Well, and will it be this way tomorrow? No. Because in the event that the people catch on, they become in the way. And, that's no good. Basically, the people are used to accumulate these large nodes, and they offer positions to the institutions. And when we spend a lot of time there, it gives a lot of time, a lot of opportunity for them to put volume in a particular area, so that when we move away after hours, and then the overnight traders and the Asians and the Europeans wake up, they can sell it all off to them. And it's been done maybe, I'd say about 6 times over the past 2 weeks. But when I look at it, and the movement can come, and the entire move can happen, and maybe about 61% of it can get erased by the morning. It just goes to show it's not for the people. This movement right here, this is for institutions and the people that have the integrity to maintain until this point of the day, and to persist with the exposure to the break of the red yellow line, because that is the trade of the day and nobody knows it yet. That's the irony. Like I said, those that have exposure to the break of the yellow line could potentially stand a chance of being exposed to the yellow line. But what is it to make a position safe by this point? It's like anybody that chased beyond the short-term target, bought above the blue line, they'll get wiped out in the retest because they don't have the best price and the market doesn't respect them. And it used to. You can pick up a book and learn how to trade from like the 1980s, and it'll be ass backwards and nothing will work. But it might on Wednesdays, and then it might on, and it'll change to Thursday all of a sudden. But you're gonna have to change with it. If you think it always works, then you're gonna have a problem. That's what I've come to realize, because I've tried a lot of different things, and I understand the best way to understand it is to understand the change, to be pro change, to understand that multiple strategies will be in play. When the market presents a pattern, it's on us to understand it, to notice it, to recognize what's changed about our regular ways, and what is the new anomaly, what is the new situation. And that's what I do every single day. It's not the same thing over and over again, expecting the same results, but it's expecting good results from different things every single day. Sometimes there's not incredible movement. We've seen a lot of choppy days. Nothing I can do about that. But whatever chop there is, I'll be damned if I don't understand it. And in this case, we broke the yellow line. We came back and retested. Everything back up to the blue line is profitable by a long shot. And essentially, accumulation back into that range has been, it's been like roughly like 16. It's interesting too, because what we've done here, we've managed to make another pop, like a smaller version of what we've done. The irony is that it's got a flat bottom triangle. Now, you may know this is a descending triangle, which I think is a terrible way to call it, because falling wedges are also descending triangles and they're bullish patterns. Whereas a flat bottom triangle tells you everything you need to know. It's got a flat bottom and it's a triangle, and it's exactly what I mean. And that is exactly what we have. And it is not the same as the falling
wedge. Ironically, if you look up the pattern on Google, it'll tell you it's a continuation pattern. It's supposed to go down. You want to know what it's notorious for doing? Is faking out of the flat part and not going down at all, but going the opposite direction 85% of the time. Watching for a break of the low just for it to get bought back up, it's like a steal. They steal another bunch of contracts at the low there. And they're trying to set everyone up so they can knock them down and get through the yellow and red line. And they have utmost patience because you know what? Their positions don't sleep. They've been accumulating since the 60s, as far as I know. Well, the ones that I'm thinking of have, because if they haven't, they ain't doing it right. If they've been around for a long time, they'll have positions from way back in the day, and it's like the companies would have to go out of business to go back to their average price. That's control. It will be majority shareholders for a long period of time, it's likely, unless they say so otherwise. And that's power, power to fire the CEO, and the CEO has the power to fire everyone else. Very interesting. Company goes under, it's the shareholders they worry about, but not the average ones. The ones that have accumulated the special shares, that have a lot of them and a lot of say. Preferred shares. Really a red triangle by any means. Yeah, descending triangle, top bottom triangle. It's trying to break its controversial spot that's supposed to ignite it into an amazing continuation. Supposed to double the entire size of the triangle to the downside. And that's what it's throwing at people right now. The most likely thing is if we come back to that low like we did the 61 a minute ago. Because anybody that's going off the information that's worked over the past 3-4 decades, it changed on a dime in 2023. They took the cheat sheet and burned it. Now it's about the test of the underside of that level as well. The support is a white line that comes from a channel all the way back here. It was used in a very intriguing way after a very large dump. An appropriate place to return back to the line, did I say? At the end of the day, the blue line gets returned to, and all the people down here get to keep playing with it. We also have to change the hour coming up in 20 minutes. This is the 200. Look at the distances that we've made on the blue, and I'm curious to see if we're interested in matching them with some of the smaller movements that we've done here. We're definitely rivaling the most recent move to get to this 200. And a new blue line like we had before emerges the need to tap it from the underside also. lot of people think that just because it breaks a level that it's been sitting on for quite some time, it becomes controversial. I think it's broken and I think it's supposed to be done when at the end of the day it's such a micro move and it changes the minds of so many people and they're all wrong. The spike just comes right back to the baseline. They don't get it. Why did it do exactly what I said it was? It came right back to the baseline. That flat bottom, what did it do? It broke down, it didn't double, did it? Now it came right back to the flat part. Because that's what it does nowadays. And it's not what it does on Google. I mean, it never does that on Google. Let's Google it right now. I mean, I don't want to like put some copyright crap on here, but I'll try not to find some. Um, if you just Google descending triangle, yeah, let's take a look at Google's response here. What does it mean? Descending triangle is a chart pattern used in technical analysis. Pattern usually forms at the end of a downtrend, but can also occur as a consolidation and uptrend. A regular descending triangle pattern is commonly considered bearish. Look at that, it's terrible. They're all wrong. At the end of the day, the chart pattern established downtrend. So they're trying to say that it's an established downtrend and it happens and it's still bearish. All right, let's see then. They're trying to thread the needle right now. Got everyone right where they want them. They've essentially been able to accumulate lower and lower as low as they can. And look at this node right here. They're barely getting anybody now. And sometimes we can have more than one go at that flat bottom too. It doesn't have to be the first time that we get it going. It can be like the fourth. And I suggest that because there's the change of the hour coming, and we could continue the process until the change of the hour. But more particulars are likely to show themselves as there's more institution, less individual going on right now. The blue bar doesn't stop there either. Neither does. And I bring it up because I'm not done with it yet. By any means. It's kind of a strange one too, because support of that blue line in there, I still think that's important. Like they have a relationship with each other. The low of that blue bar and that blue and white line, that is the low of the channel. And it keeps getting tighter every moment that it goes on. And it's weird, it's abstract. It's just the way that it is. That's the way that I see it, I guess. That being the low of the range. Because typically this would be the low of the range. But I think this is going to have a lot to say. Sure. We can see it's been a struggle to get back to the blue line on the short term. The same concept is similar to what we've done with this blue bar here. Except it's as though we've come back to test that blue bar and then grinded it into a new low. Ultimately, to get on top of it would mean rivaling the red-yellow line. Now, the break of the red-yellow line isn't the profit target. The profit target is to double this entire range from every single bit of movement that's ever put below the blue bar, putting it on top of the blue bar final, which means this gold bar. Now, of course, this gold bar can through breaking the red and yellow line here. Another thing that I find is going to be really, it's going to throw a lot of people off is when they throw this up the market and throw it upside down. Because they show it one way all day, and then, it's new. So when you show it upside down, it takes people a while to actually get it. So I start to look at it already upside down and consider where it would be appropriate in the trend to come. It's likely to be in the opposite direction, of course. Yeah, they're trying to find that perfect spot where nobody's paying attention here. Large orders inbound. Blue bar, an attractive point to stop the buying. You're going to accumulate all the way up to that blue bar. Maybe I'm moving it. No, I'm just kidding. I just know the game as they play it. That's all. They're just keeping it going. It's like money printer has been activated. They're just trying to get everybody out of the way. It's unreal. And when they pull back the majority of the move, they'll step on the very beginning point where they started the accumulation. And everybody else just gets pushed right out of the way. And they will change the way that they do it when the people change and adapt to exactly what this is doing. But I'll be damned if they calculated it just like I did right there. I won't even hear it. It's like it's so precise. It's so unlikely that other strategies have fallen into place exactly at the same time that the institutions put their money into play. Maybe and it's not because it didn't happen like that yesterday. Like I said, and maybe it was the 188 or whatever. What about that exact time when I literally just warned everyone, hey, there's gonna be a big order. What did it do? Nobody thinks exactly the same way I do, but they got a lot of money. I was just taking back the majority of the move. they're testing the waters, but the people are just hovering around in their faces. And once we can get them out of the way, it's going to be perfect. No, it's not even about getting them out of the way, but accumulating what they think is valuable, and then playing it out in front of them without them in it. Sounds cruel, but it's going to happen to over 1,000 people by the end of the day. And everything along this low that they've accumulated, they just end up keeping it. It adds to the pile because they need so much liquidity to be able to accumulate a position that requires a consolidation. You can tell they're just trying to clean up that consolidation. It came back nearly all the way to the low, but not exactly at the low where they started the buy, no? Because why would they have to clean themselves up? They're the ones that decided where the price reversed, and you can look at the volume. There was nobody there. Look, why would they have to come back for them? They were sellers, if anything. Now we clean the range again. Any chasers that come by, I bet you they're going to be from this point on. This point on, we come back to. Any stop strikes above this point in the next last are going to get wiped. So hardcore. But I see, I know what you mean. What you mean. What Wyckoff means about the general idea of being the composite man has like a campaigns. He looked at them as like militaristic campaigns, which is kind of crazy in my opinion. But I can see the battle between those that have the targets and the expectations, and those that are trying to get lucky. And so the people that are getting lucky on this move at the end of the day, they don't even know what they have. They all want to sell sooner than where the target really is. And the institution, the market makers, they don't like that. Essentially, the market itself doesn't respect the positions that are accumulated after the fact that it's already reversed. They demand that you understand the reversal, and then when they put you to the test, they expect you to be able to handle it. And how do you handle it? Well, you can take custom profit when it's profitable. You can drag your stop to a point that it's profitable on a partial position. You can always retain some from below them. But if your last contract just has a stop at the very low, and you can get stopped out on everything else higher, but that last contract, that last little bit of exposure, market shouldn't take you out unless it makes an entirely new low. And if you have reason to believe it's going to be wicks and spikes, you may be able to accumulate more position on those wicks and spikes, depending on if you've sold it off already or not. But if it's the first trade of the day, you wouldn't want to do that. How many times have we hit the blue triangle now? And do we break it the next time we get through it? I think so. There are many people that's just been a long drag in this consolidation. Little do they know they're being worked on. The institutions are working on the people right now. They want everything that you have. I mean, for what? This little range? Yeah. Yeah, they're fighting hard for it. They want everyone out of the range. So they can accumulate all of it. Contrary to popular belief, too. But mark my words. The institutions are coming. The sharks are circling. They're trying to thread that needle. When I say that, it's like, finding a very, 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 very tight yeah, like I just looked up the threading of the needle, and it's like when people in the wingsuit, go through like a really tight crack, that it's like if you screw it up, is on the sidelines, and they can just pump it and get rid of everybody out of the way with the same amount of volume that they use at the beginning of the day too, because it's very tricky because people will be up their asses if they put a heavy amount of volume on top of a position that they already have. It means that they can push the market, and there's proof that they put heavier volume into the market on top of their positions. Then that, it's really easy to get dinged for market manipulation. Because how didn't you move the market up with all the volume and power that you have on top of your positions and then start piecing it out to the public? It's not very fair. It's illegal. But I'll be damned if it doesn't happen. It's going to happen right now. The irony of it. Except they do it in smart ways. Like, of course, not using the same amount of volume. Like, if you're like, oh yeah, we only buy 100 here, 100 here, 100 here, and it doesn't barely moves anything when they do it in here, right? Because it's all the volume that's up in the beginning of the day. That same 100 right now, though, I think the market would feel it. They keep those securities on the sidelines ready to go. They can trade different parts. Always able to sell part of their assets if they need to. Like, let's say, for instance, if they develop a hedge and they've got a ton of assets from the 60s, they could create a little bit of a sell-off to make their hedge profitable again, which is also illegal. But they do it. They're just good at it. They're even better now. I mean, like I'm explaining things like that's how they got caught for that crap in the 80s and stuff. I wouldn't tell it. They're only better now. They have more money. And they have a whole lot of patience. Change the hour coming up. And also this level up here, like the 261 that it had, totally high, but okay. I'm not gonna leave all those levels on. I'm gonna mark it instead. Because I marked it in the future there, I know it's not from the past, so no, it's not an old 61 like, or 260. And I'll turn it down a bit because it hasn't been not never been touched, never been acknowledged. It doesn't have to be, but I want to know if it is. If it ever comes really quickly, I want to be placing it right. I want it there. Anyways, we're in the blue line, blue bar, and this is the whole purpose of the consolidation, ladies and gentlemen. The idea, the relationship with this level, huge. This level here it was once 1, 2, and 3 lows, and it came back up and tested it from the underside. Now, yeah, it's getting real dodgy with its 3 lows there. It's like, yeah, I could say that this right here was the first of the major lows made. There's an argument towards the distance that we made here and here. Like if I'm generous with it, it could be very similar to the distance that we did here. I like when it acknowledges all the blue lines here. We can see that it's going from abstract line to abstract line. It's pretty much given us the same kind of attitude that this line had when it broke. When we broke it, it was like kind of like fuzzing away from it a little bit, and it was like, yeah, retesting. Good luck retesting that line now, right? It's like how far down it would have to go. Not impossible, but it's unlikely. I would say that would be an extreme retest, and it would hold too if it did. Very likely, but because it's so extreme. However, that trend is in the past, and I turned it down for a reason. But it does remind me of what's going on here. We didn't have the same kind of break though, but the same kind of attitude towards retesting it and getting away from it. You know, each moment that goes on, the idea that we're retesting this line becomes less and less of a reality. You know, it's like, you know, give it an hour. I mean, how far down is it going to be? You think we're going to be able to keep up with it? Good luck with that. You know, it's like it's not like it's a pretty steep line. Now this blue line, on the other hand, that's a lot easier to keep up with than this blue band. It's a lot easier to keep up with. But I'll tell you one thing: time is working in favor of us getting back to this bar. Time is working against us getting back to these yellow lines. Because you know that sideways motion takes us away from these lines. And sideways motion brings us closer to the blue bar, brings us closer to the red-yellow line. So we have to continuously exert downwards movement in order to buy time with these levels that are otherwise on top of us. This is an attempt at the most recently broken trend. And it's getting more and more difficult to pull off that same thing. I can see on the short term it's got 3 consecutive lows, which does pull off an interest in this level. I'll make it blue. And these old blue ones, I'll just take them off because they're done. That's the blue line for the moment. And it's the first of the 3 lows. And I mean, can we see the 3 highs too? Like, what's going on there? 1, 2, and 3 highs, right? It did not come into 3 lows as well. It's really got 4, I guess you'd say, but there is definitely 3 at the end of it and 3 at the high of it, and it's expanding throughout the. I mean, it's a fact. I didn't make it up. So I'm like, okay, we can either accept it or neglect it. It becomes right, but it's doing that. Accumulation just happened off that low. Nobody cares about it. Somebody just recognizes the way that it was. You know, the way that it's been. The 3 highs and the 3 lows. One that we've been seeing a lot of lately. And it's done in different ways. Like, remember when I was talking about it before? Just looking at this area of the chart reminded me when we did this 1, 2, 3 highs into 1, 2, 3 lows. And I was comparing that against how we did this in the past. Because they're very similar in a lot of different ways. First of all, this is the only difference. And it's a big one. Ironically, it means the failure of one pattern and the success of another, or the formation of another. It really means success. Volatility is increasing towards the end of this consolidation. See another precision test of the blue bar. Ultimately, the bar, you can try and push away from it, but anything that he does push away is ultimately going to be bought back in its break. The blue line, more than retested, took back the entire range. But it's also created another trend. As important this one as this one has been, as a new trend. And why I mark that is because until we break it, it is a fact that it is the downtrend. And until we break it, we are in a downtrend. Because we can't, you know, deny that the downtrend still exists until it's broken. It's just the logic of the situation. Now, here we are coming close to this 261 area as well. 200. At the end of the day, returning back to this level is incredibly likely past any point we have in the future. Any wicks, any moves here are going to be considered, I think, wicks spikes that lead back to the node. Kind of like a 5th wave could form. It's kind of given a vibe to me, actually, that it's like a 4th wave. And it's a hell of a 4th wave, too, because it reminds me of an ending diagonal. That's the schematic for it, where essentially, instead of it making a normal 5-wave move and going up, it does 3 drives at the end. And it's not that, I mean, if you don't know about it, it's a huge deal. But if you know that the 3 drives has the same impact of playing out the 5-wave move, that's the key in this situation. The consolidation is acting differently to the last as well. More volatility, more movement. Change the hour, increased slight volatility. Hour begins at the 200%. Well, 200% that's related to this level up here. 97 points up. Wow, 97, eh? 97, you say? Hmm. When the market ended, I recall looking at that and thinking, damn, that was a move, and it was like 97 points. Intriguing. But it carried on after hours. I just stopped looking at it when it was 97. It's fine. The market stopped at that time, so maybe your friends also stopped looking at it at that time. So maybe it doesn't have to be even, but even to our memory is 97 points. Always something to consider. And it doesn't have to be the same as the last consideration, sure, but a new one involves, understanding the variables of the current situation and sorting them into a understandable fashion that allows you to have an expectation of the situation. I had to say, and everything's is quite interesting. The kind of being used last period of the day. As I mentioned, people are in the way till the end of the day, and we've had a lot of movement at the close lately, including the one that we are on right now. The entire dump since its inception was created after hours, or not by the people of the American public. Ironic. I think it would be them that had the power to dump this market, not the decision of the after hours traders, the derivatives traders, the hedge traders. What are derivatives for? Hedging. you know, you look at the derivatives that are created out there, and they just so happen to be created for hedging. It's not that they were created for hedging correctly, but it could seem so. It could seem so. Like even when you open up a derivatives trading account, they ask you speculation or hedging. You know. This is not true that everything seems to be bought back up to this stupid flat bottom triangle. It's quite a bearish pattern, is it not? Wow. I'm just kidding. Not at all. But that was the one that I pulled up. Remember this one? I don't want to get the credentials because I'll completely roast him. That's the first thing that comes up on Google. Pretty current too. The descending triangle is a chart pattern used in technical analysis. The pattern forms at the end of a downtrend, which you could say, oh, whoa. At the end of a downtrend, where they're giving it away now. It can be used as a consolidation in a trend. A regular descending triangle is commonly considered a bearish chart pattern with established downtrend. So hold on a second. The pattern usually forms at the end of a downtrend. The end of a downtrend. How is it bearish if it's the end of the downtrend? Come on. Come on. Am I crazy? Or is that just freaking ass backwards? That is really not cool, in my opinion. They're like, how's that? Or am I reading it wrong? Or is that's really crazy to me. The pattern usually forms at the end of a downtrend. Is that bearish if you're trading at the end of a downtrend? If it's considered a bearish pattern, what does bearish mean? Let's talk about that one for a second. Bearish. Means, because this is really crazy. just strange. Because I don't like, when people make it difficult, because it's clearly making it difficult. Right. So, bearish, according to Google, the dictionary. I don't mind putting them in bold here. You can see we're making it into the blue bar, by the way. But what does bearish mean? Marked by tending to cause a fearful of falling prices. Bearish investors, pessimistic. Commonly considered bearish chart pattern with an established downtrend. So you've got your established downtrend, and this is the pattern that usually forms at the end of a downtrend. At the end of this established downtrend, so it's the end of the established downtrend, and we formed this. Well, not to take anything incredibly literally, because I'm sure there's been many that have went down as well. Okay, it's just you got to be careful in 2023. Things have changed. It's not the way that it used to be, and maybe that was a bad explanation from Google, but it was the first one. I'm like, come on, that's rough. And freedom of speech can get you, get you really hurt because he can say whatever he wants, and it says one thing, and then contradicts itself by the end of it. And it's the first thing that you can read. And I'm like, well, that's really crazy. So if it's the end of a downtrend, why are you trading a bearish pattern? If it's the end of the downtrend, does it make sense to trade a bearish pattern for its continuation down if it's the end? It does not make any sense logically. It's absolutely crazy. So, be careful, Google. Will, you can say whatever you want. It doesn't have to be right. And clearly, because anybody associated with a continuation for it to go down having a tough time right now. Ultimately, it's went sideways first 15 minutes of the day, or 15 minutes of the hour, sorry. I can't help but notice that it's hit the medium bar yet again. But it's done it from a higher point, and what I question is whether or not the expansion comes to an end. Whether or not we're continuously interested in making our fifth high, 1, 2, 3, 4, okay, fourth high, fourth low, to compensate for the fourth high, essentially. Or retracement back to the low of the node and not a new extreme. It would be like, where did that come from? We do have another viewpoint in here, all short term. See that yellow lines in action like the other one was, so we're getting like negative responses to it and testing it from the underside is pretty normal in that case. Like you can see that when we first ran into that yellow line that have dimmed out, it tested it multiple times from the underside before it was able to break this. And it's kind of treating it like that case. In a very small. Also interested in 88% retracement. Low of the node right now, that viewpoint just got smoked. So below the node is where we're currently developing the most support. This consolidation is being put to the test heavily because you know what? We just popped in to the top of this blue bar nearly as much as we went out of the bottom of the entire range when we drop beneath it. And it's going to have to be met with an ultimatum here now where basically it can't really hold the low of the range or the blue bar. And it's like triangulating essentially. Well, in reverse essentially because it's expanding, but still triangulating in a different way. low and the fourth high. 261 is closer than ever. Not quite. Oh, yeah. Another thing I like to mark at this time of the day is the balance, because it can be a nickel for volatility. And marked with a dash line. And by this point, everything is pretty much subject to being exposed to everything from here on out is subject to being exposed to balance. Small viewpoint in here as well. I can't help but notice that the consolidation that we had is separated by two spikes that lies on either side. I'm curious about that. Right now we're testing the extreme of the expanding wedge just above a two. That's the two. And getting back to test the underside of that triangle, be on the table as well. A short-term fluctuation. And the short-term fluctuation gets back to the underside of that line, secondary low as well. Plenty of time. Um, and it's like a falling wedge has played out, I believe, from both sides as well. I count. They even quality on both sides. Thanks. Not a whole lot of movement off of it so far. Essentially, every moment that goes on, the distance line is important, meaning it's not as impactful of a movement to it. So when we lunge towards it and pause, with each pause, it makes it more difficult to get back to that level. Not that we're not going to get through it all. Essentially, it just means it's a lower level. So you could set out, for a move from the low, targeting a level like that blue line, and by the time it actually gets there, it's not actually the same level. You have to take into consideration the angle of the trend and its level of decay as we go on. Of course, getting on top of that blue line is a direct ticket yellow. But the relationship with that blue line, like I said, could create some sort of secondary low, get us back in falling wedge. And these levels in here, they do have value to be built. Line there. Where the secondary low is possible. However, getting on top of the blue line should be relatively after. Much of a secondary low, that's like a 50. But it's working on getting through it and getting familiarized with it first time. Each time that it's hit, it's gotten a little bit weaker, so what I see is like this. A little bit. Now, when we get on top of it, that's funny because I consider it a little bit stronger. It's a resistance barrier right now until it's a support. And when we get on top of it, the support down in secondary low. Threatens everybody out of it. They gotta really want it to want to be in it kind of thing. Normal. I can't help but notice that even with the secondary low, it still remains the case that there's plenty of time remaining with the yellow line if we are to spend it at this level. Now, the gold dash level below is at 261, right? And at 261 was all the way up to this B point up here. Ironically, the VWAP. I question whether or not they will do something similar to what they did before, where they grind it and get everybody in on it and grow the node a little bit and then spike back, like in the form of an S wave. Basically, trading back up towards the 261 and accumulating everything under it. They're trying to grab everyone's stops like that. It's trying to like come back to it. Like somebody bought it back up. See if they can get another round of people in there. I think that that's going to be like a third low where they're going to try and get more out of the 261. And then accumulating back to the 261 is going to be apparent there in a moment. Sometimes there likes to be like a little bit of a spike that makes it even on both sides to get back there. Really slow right now, which insinuates that they're trying to get people to grab it so they can spike them out and then get the 261. Spikes are coming. Oh, very slow spike. Question becomes, this all want to be part of the node? A yellow, or sorry, a line, term, minute. Its break could get a downtrend like that one under control. Now that trend, it might have a little bit of a fake break to it because the chasers are going to be associated with it. But the blue line, you know, very attractive it was to get back to that line, and ironically, it was the same pattern as what it did a moment ago. red yellow line here. So basically relatively centralized. We're at the low of this giant node right here. And on the daily, I'll tell you what I'm considering on the daily. Movement right here. So circle and then N, and then this move right here. SOW and phase B.
Perfect.
This is the ST, the BC.
And that's the line where the first high is too on the daily.
It's like really low, yeah. And this SOW could lead into the upthrust, which is like pretty significant move back up to the highs. But like that, no wonder why it's like a little tough on the people. It's very particular. It just means that like the majority of the strategies are, you know, they're very particular. Like it comes down to a consolidation where everybody associated with that consolidation is wiped out until the very final pinnacle of its reversal.
We're still on the weekly. We're still only in the middle on the RSI.
On the weekly though, yeah. The daily though is low. Like
yeah,
the
daily's coming down. Daily's coming down.
this red zone, it's a really strange area. I haven't seen this in a long time. Like this area can be used, but it can also be a green zone and red zone in here. This area, it had consolidations like this, and then putting something in the middle, same size as what it had on the bottom and the top. And this is from the way up, not from a gajillion years ago, like the other ones. But an attractive area to consider a break of the next yellow line. Falling wedge is a very particular thing. Another level that I'm intrigued by, white dash line, as it's a level that it's somewhat predominantly been bought back up to. So I think we're going to continue to see that buying back up to that level, white dash line. This move could have, like I mentioned it earlier, that it could be a multi-day move as well, and it really has potential to take us back to the high on the daily. So quite intriguing, and it's put people at a situation where like, okay, everything that has amounted to going long today, it hasn't worked unless you've protected it properly. When it hits the target, taking off enough, making sure that you're managing it properly is key, and trading back to short-term levels and making it safe by doing so. But when you do that, you can see that nothing is allowed to have been sustained until the end of the day. It's been really tough on the people that saw the value and goes to the red yellow line. But ultimately, I think it's just because they want everything they can get. We're not interested particularly in using this range below. trying to find another moment, and it's getting a little bit easier to make the moves, it looks like, here for them as the day develops into the balance. The idea is going to be to get control of the market, and I think that they're going to try and attempt that centralization for the imbalance. And returning back to the B points as a result of everything, which is basically like testing the low of this node, be done on quite a swift move. Honestly, a move like this one. Secondary low for those that took the falling wedge. A new trend really is apparent. And so can another falling wedge. Check fibs on the major one. Finding the one. $188 in red zone. Getting another towards the level. I'm going to mark it even clearer. But I think that's very important. We got everything accumulated back up to the 260 originally. Not uncommon. common for us to get that kind of move, like we saw on this dude. Now the 261 associated with this B point here, so it already played out. Whereas this one has not. Goes to this point all the way. Can't help but notice the entire move up here separated by a move of similar size on either side. Basically, it's got a handful of people in there as well that shop that shorted for the continuation of the flat bottom triangle, and I think they're going to be used in part of the squeeze. Because I noticed that at the time of their position entry, or at the time of that flat bottom, I think that that is a critical point that can align the volume that's associated with breaking the entire trend. Same sell-off we had earlier. That sell-off that we had earlier was all bought back up. Off of the 261 when they rallied. That move, like, it only is after the move that analyzed. Out of curiosity. Holy shit, that would get that B point. No way that would get that B point. That's wait, remark. That level be like so precise like that. That is the green dash line. Same move that we made off of this 260. That's the 261. So is this here. Ironically, the move that we have here is associated with the triangle, is it not? And does the triangle not end with consolidation? And then we had this same move from that B point down. very intriguing to me. I like that a lot, actually. And it's not because the public is aware of it doing that. I find it very unlikely that there are. Those that remain are likely not fighting for the intention of a powerful reversal, but instead trying to fight it back because they're down. That is the that is the case with days like today, because the majority of people can only go long. Like I said, when they see a big downwards move, just like when we go sideways, up then down, the bullish pattern, the biggest component of it is a downwards move, just like a falling wedge, just like an M that goes down and it's bullish that goes up, right? Just like any other bullish pattern. Like think about the inverse head and shoulders even. It goes low, lower, low, and then higher, low. And then that's bullish. All those lows, and it's bullish, eh? Low, low, and lower, low, and then a higher low, and it's bullish. You're telling me? No, that's the case. So this entire move right here, the entirety of it, everything we see today, is subject to being bought back up. Falling wedge, it's like, oh, we saw that play out once. We came into a secondary low. Do you have what it takes to take it again? No. Stay positioned for the break of the red yellow line. Because all of that counts. Being part of this dump clearly doesn't count because it's all way back. They're all losers by this point. What happened? And it was hard to get to this point where it broke all those lines and made them losers. It's ironic. I mean, not to say I ever said the short in that part, but everything about that descending triangle, every single person associated with it right now is panicking if they didn't take profit. But continuation pattern, hardly. But one that has the power to reverse the entire trend, that's not so bearish. Instead, it allowed people to chase it. Like, it reminds me of this when we've got like, oh yeah, head and shoulders, and then it's like, oh, it's working, it's boom, and it's everybody's screwed. But it got to the neckline. That's nothing. That's points. At the end of the day, the head and shoulders is this. This is a major component that's forgotten about the head and shoulders. The uptrend it should sit on top of so that it can reverse it back down. The blue and white line that essentially has been, reduced to a blue line by this point. It's been incredibly powerful since its inception, and the break of it is directly associated with the red yellow line. This reminds me of like the shoulder list inverse. Something, we don't have enough time to do this on the right hand side. Well into the end of the day there. Of course, this is not the end of the day, it is the imbalance. It's the last major event of the day. Second line, the end of the day, just for visual represent that one darker. Yeah, I posted the original falling wedge and it playing out. And I said falling wedge playing out below it. And then the next one, the last one, the white arrow. A level I find attractive for a nice accumulation run. It's impossible to be down from that picture if you took it. And if you took the previous falling wedge and endured the secondary low, then you're still fine on that one. But obviously, it came into a secondary low. It was a matter of perseverance at that point. Persistence. in the name of difficulty. Persistence in doing something despite difficulty or delay in achieving success. Perseverance with the technique illustrates single-mindedness. That's the definition of perseverance. Persistence is one thing, but in the name of difficulty, continuing, because you understand exactly what the power of being exposed to the right thing means. Being in line with the people that also can move it at the end of the day like that. Until the very end, they ensure that they step back on their tracks, meaning everybody that tries to chase the blasty bits not in a good position. Everybody that accumulated below the breaks of the yellow lines and aspirations of the trend change is able to manage their position so that it's safe to continue holding. At this point, like I said, it's very difficult to be down if you took that falling wedge long. I posted even on the high of the green candle. But at this point, missing the run is not an option. Keeping the stop safely placed at a profit option as well, but taking off enough profit to make your stop safe is another option. Many people do not consider that. It's a powerful tool. And not always is it a one size fits all with how you should take every single trade. There's different strategies for different management approaches in different environments that suggest that managing it in a certain way is better. And in this environment, keeping control, above all, is important. Making sure that you give it the flexibility that it needs is also important. With each load that it makes, to a computer, each load that you catch, you get your stop and profit and try and let them run. That's it's not aware like it is to a human being. The human being doesn't realize that they're getting a better price every single time it goes down, and every single time that it goes down, it gets farther away from their target. It ultimately sits and remains untested. We can see now the majority of the blast has been taken back on the imbalance, but the imbalance is also likely to be taken back. The entirety of the move of the imbalance taken back, as it is the way the market should move. Not because of any strategy that I have, I just know it's supposed to move a certain way, and that's what it does. It moves in the favor of the people that understand, make the market the way that it does. And it's not my strategy, I don't make it up. I follow the rules just as they do. And the rules change every day. That's what the individual cannot understand. That one strategy is not good enough for the market. I keep saying that, but it's track 30. And it's like, meanwhile, the individual will go to school for 10 years and learn how many concepts. To do any profession, you gotta learn more than 30 concepts when you go to school. Nothing to learn 30 concepts, and they're grade 3 concepts too. Like it's ridiculously simple. Like there's less than 4 clicks on every single analytical piece of data that you're looking at on the screen right now. Now there's a lot. I could remove some of it, sure, but at the end of the day, it means we're going to have a less effective map for the it's not a trajectory, but the I can't think of the word, but the the environment has all these obstacles and everything in it, and they're used to be able to find an understanding. And by the end of the day here, everything on that imbalance was brought right back up at a time where everyone is like, I better wait and see. I don't know about the imbalance. It's a risky time of day for me. I've heard it a million times, and it's a fair thing to say, but they're being controlled. Clearly, they wanted them out of the way, and clearly the move was right to take it back up for the imbalance because it was supposed to be stuck back up, and it did suck back up. And everybody that didn't maintain a stop at the low is been knocked out of their position in this move. So who's that good for? Makes me think, who's it really good for? Somebody that's trying to accumulate a mass position from the low and the break and the aspiration of getting to that gold bar all the way at the top. Because you know what? We don't get to that red yellow line just so we can hang out there. We get it so we can break it. We're going to maybe respond negatively that's fine. Just to accumulate more. You know, if people are trying to flood the gates as soon as we get through that level, we don't like that anymore. I remember, you know, when this group first started, I used to use this analogy, like the market makers were struggling with the public because it would be like a bunch of bulls in a pen, and they let them out of the gate. They couldn't stop them running. And I could see the institutions struggling to maintain their composure while I called it the herd, which has become the horde because it's derogatory essentially. And I think it's bad to be part of the herd. It's not a good thing because the herd takes a hit. And then what do you do when you go to the mutual fund manager or whatever, and it's like, everybody's down right now. You know, you're down too. It's like, what can you say? Everyone's like, okay, and they just accept it. I'm like, I won't accept it. You know what I mean? What about the control part? You know, it's like, it's for me, it's about understanding. You need to know how to do the short-term range in order to get exposure to this long-term run. And it took analysis to the end of the day, with the idea that, hey, we've been seeing so many moves at the end of the day that have lasted into these amazing moves that we can see such precision institutional work in play right now. At the end of the day, just cleaning the board right up. Somebody's getting a bonus for this 100%. You know, just essentially they created that big move out of the falling wedge, and they showed their presence. Anybody that was late to it got overlapped on the imbalance. And if you had the guts to trade the imbalance, you're in on the break of the trend now. Pretty much, and that's the reality of it. It's very, 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 very. I mean, is that what it took then? You know, because I'm like, it better stand out. That's to me as well. Because I mean, like, God forbid, does anything similar to what we just saw tomorrow, we don't notice. Because the name of the game is because like this is what it took to get this trend, the optimal breaking point, where the people that you can see the market move the market like that have that absolute control, and it's like complete and absolute control of the marketplace. They're completely, I think, breaking the law right now. But you know what? You cannot find out who they are. They're incognito businessmen of Wall Street, we could call them. You know, business people, I suppose you could say. But or I should say, but forget about that. At the end of the day, the idea that this huge, incredible move that we see in front of us is not getting overlapped for the second time, but instead holding the POC, an area where we've had many people trade at this level to make that node. We're getting on top of every single seller here, just about to get to my arrow with absolute precision. And I mean, like, you know, like if you can find another analysis of the market for the end of the day that was more precise than that, I'd love to see it, 100%. And it's not because I've ever analyzed it in this way before, but because it's the way it was right now. It got right to my arrow. Here, I'll put this one. But take a picture and put it that. This was the a level I find attractive for a nice accumulation run. Somebody else found it attractive for an accumulation run too, because it like really did it like magic. That's funny. That's funny. Because you know, it's like back in the day, you know, it'd be incredibly believable, but obviously it's just math. It's not magic. It's math. That's the people. That's the funny part. Because in humanity, you know, people just needed to see the math clearly originally, and we wouldn't have been fooled by the magic. Because really, it's just like a little bit of science and stuff. I think Brian was telling me about how the witch's hat was actually because of the wheat pickers or something like that. They had some fungus on their hats and made them glow in the dark, and everybody killed them. I mean, like that's the witch's hat or something. That's ridiculous. Just a little bit of science. But glowing in the dark, that was just too much for them. Couldn't handle that. It's like, what's the price of not seeing the science of those people's lives in that case, which is that's pretty perfect. Yeah, at the end of the day, breaking the trend. We're pushing through. The institutions get everybody out of the way for the end of the day. It's rhymes and everything. There's no way that the public is doing this. Why would they make it so difficult for themselves? I mean, at the end of the day, they would be really black and white for the people that they control. And I think that a lot of them have similar strategies that follow the same patterns. Now, just remember, every single person that was associated with this being a continuation pattern to the downside is now at a loss. And to essentially have bought against it and to have accumulated with the institutions in the clear falling wedges, even though the first falling wedge put people to the test, you would really want to be in and understand the value of it. And of course, by this point, you can protect yourself, taking off enough contract. Even if you have three, if you took two off, you can hold one overnight, and you can let it run for like 1,000 points, 2,000 points, probably more. Get that running. That's the value of being exposed, and just put it on the back burner. We'll figure out a spot to hedge it overnight or in the morning. But that's the end of the day there, and pretty much we've had a phenomenal end of the day, and